Good morning. Welcome to Trade Live with IG. It's bull market time. Yes, we've got new all-time highs for Bitcoin, new all-time highs for Nvidia, and a new all-time high for Luke Moore.
Hello. Explain. Oh, look at that. Oh, hang on. Look at this. A new all-time high for the show, actually.
Hang on, let's get a wide angle here. Here's producer Phil.
He was too late walking into the bloody studio, so he's got a cup of tea. 2 bags still in it.
Rich was running a little bit late running into the
for that,
studio
buddy.
today. Had to get his makeup done, I had to get his mics done, and he's come in and he said, Phil, sorry to be, I know I'm a diva, but would you mind just going and get me a cup of tea? I mean, what kind of show are we running? I dropped a cup of coffee in yesterday.
Great show.
And now you're getting tea delivered to you. I think you're getting
This is what happens when the show dishes you out 220% moves yesterday. That's right, SWC, whoa, up it went, up 21%. And boy, oh boy, Boise says Piers is having a good week. Yes, he has. What was Plug Power up yesterday?
Last I looked, it was about 27% last time I looked. But it was on news. So news came out on a new, off the top of my head, it was a new extension of a hydrogen deal that they were looking for. But it's breaking out of a low base. Let's just say that. It's come down a long way.
Yeah, absolutely.
And it's coming off of a low base. So hopefully we can get a bit of a breakout and moves on. But no, good for Plug Power.
What milk did you put in this tea?
Normal milk, apparently.
Right, what have we got coming up on today's show then? Well, Luke Moore and I are with you through to 8:30 this morning.
Here we go.
And actually, Ange is going to have a good chat with you, Phil, at 8:15.
Yeah, I'm going to be here. I'm here till 8:30, but you're here till 8:15.
That's right.
Then coming back on at 8:30, we've got Nick Feingold back in the building for Experts Edge, and we know that Nick has been making some fantastic calls in the tech space. Tesla's been a big one that we've been looking at for him.
That's right.
We get him back on.
So we've got one not in tech today.
Ooh.
And it's even European.
Interesting.
Because it is the day of the European fight back. We'll go into that shortly.
Okay.
Then at 9 a.m. we've got all sessions. That's right. What is going to open up today? Is Nvidia going to stay above 4 trillion? Then at 9:10 a.m. that's it. We've got our brand new podcast, which we're actually only filming this afternoon, and will be live with you tomorrow afternoon. But you're going to meet the two gents that will be co-presenting The Art of Investing with me. That's coming up at 9:10 this morning.
Nice.
9:35, what we got?
9:35, we are bringing in the heavies. IG's very own,
Harsh, not that big.
our very own portfolio managers, Aaron Bright and Martin Harris, are here to discuss the macro minute and bring you up to speed on everything they're seeing in how they're building the portfolios, what we're getting from BlackRock in terms of asset allocation research, and they're going to bring you all up to speed. So hang around till 9:35 till the close for that.
Good. Right, now, what am I talking about with the fight back of Europe? Well, last night after hours, we had a story that Ferrero Rocher were looking at Kellogg's. Let's get that story up, please, team. Kellogg's shares rise up to 51%, up to 26.50. Ferrero is nearing a $3 billion deal to buy Kellogg's. That was out in the Wall Street Journal. That, if you are a Kellogg's shareholder, that is great.
I'm one that came out of nowhere for me. I did get that, and it was awful. Do you think you could name any of the other companies in the Ferrero group?
Well, I know those, the beautiful coconut.
So Ferrero Rocher is obviously the king, right?
Yeah. No, it's not the king. It's the ambassador.
Oh, okay. Is that a thing?
Yes, the ambassador wishes to offer you.
Well, they're fancy. I always get them from my nan at Christmas. So I always love getting my little tray of Ferrero Rocher. You could have given the answer Nutella.
Ah, of course, the Nutella maker.
Nutella. You could have also given the answer of Kinder.
Kinder Bueno and such.
Kinder Bueno and the little
It's a very European company, isn't it?
It's very European. And apparently Tic Tacs.
Yeah.
Didn't know that one. So, yeah, that's a big bid, though. That's a big bid because, of course, Kellogg's spun out Kellanova 12 months ago.
Right.
And so they were purely left with the cereals business. And yeah, so Ferrero have come in to have a little look at them. 51% is a big move, a very big move.
It's incredible, isn't it? And it shows you a company like Kellogg's. I really hope nobody's short. But a company like Kellogg's, you know, there is value out there.
Yeah.
The value stocks. How has that actually performed in the past couple of years? Let's get the chart up for you people there. On the daily, it has been a very dull stock year to date, dropping from 21 down to where it closed last night at 17.50. Let's see when it was last at its bid price, or alleged reported bid price of 26.
It's not even that peak, is it?
Yeah, back in May 24, it was almost there. But, yeah.
No, that's even further back, isn't it? I was just trying to think. It was 2023 that Kellogg split out the American cereal business.
That's why
it's 2023, so it's 2 years ago. So it's not. This is going to be the kind of post spin-off listing, so you might not see it in there.
Anyone else come in for it?
Oh, you've got to think, I suppose, consumer snacking companies, maybe a Nestle. Would they have the might to look at them? Trying to think of the other American brands. I'm not sure. But then I would never have looked at Kellogg as a business that you would wish to pick up. I mean,
very staple, isn't it?
Yeah, very stable. But then Ferrero Rocher is, you know, they're kind of a sweet. Nutella, you would argue, is probably the most aligned to Kellogg's. So maybe you see some expansions of, you know, Frosties and you know, the collaborations between the existing brands.
Yeah.
Maybe. I don't know. It'd be interesting to see. Interesting to see how it'll go. But yeah, good for them. I mean, one to watch at the Open, of course, because that'll be in an hour and a half.
Always a good bit of action in this sector, though. So obviously Cadbury's got bid for in 2006, I think it was. Actually, it might be 2005. And it was one of the first big deals that I was kind of involved in.
Right.
We were trading the stock, and it was £7 bid, I think. And then, of course, you had the Boots the Chemist.
Yes.
That was another one.
Yep.
And then that now is, you know, potentially being spun out of...
Spun back out of private equity, right?
No, Walgreens.
Walgreens. Yeah. Walgreens Boots Alliance, of course. Yeah, I mean, that's one to keep an eye on. The other one that's worth keeping an eye on is TSMC have announced their results this morning.
Ooh, right. That sounds like a bit of overnight action then. Let's go into it.
So yes, TSMC, you know, one of these huge parts of the AI infrastructure world. Of course, you know, we saw NVIDIA bosh through 4 trillion yesterday, becoming the biggest company, the first company to ever do it. Bosh. And then you've got TSMC. This company just continues to just print. Their third quarter sales rise nearly 40% year on year, absolutely dominating any estimates. So 31.9 billion, which is up obviously 38% from previous. I think the market was guiding. It was guiding, if you can see here, in Taiwanese dollars, I imagine. What's the Taiwanese currency?
Ooh, there's a test, isn't it?
Question. Anyway, the market was looking for 927. It brought through 933. So it was a beat on the estimates. And we're going to get an earnings call later on today. Of course, they've been a big beneficiary with NVIDIA because they are the manufacturers of the chips. NVIDIA, of course, just designed the chips. But yeah, just incredible growth. And there is seemingly no stopping this kind of race for compute and race for chips. It's quite incredible, really.
Great. So yeah, it will be interesting today. Friar Tuck just telling us dollar there. It is the Taiwanese dollar.
The Taiwanese dollar. There you go. Thank you, Friar Tuck.
But yeah, just to go over some of Graham Dixon's shouts. So you remember we had Dixon and Pensana up 12% yesterday. Maturin is reminding us. So that was, when did we have Dicko in?
Dicko was on Tuesday.
Yeah, so 9:30 Tuesday, we were at wow, 62 pence, and now we're at 72. So it's quite a strong move up there.
Yep, very good.
And then the other one was defense.
Yeah, Defense Holdings.
Defense Holdings.
Which had a good day on Tuesday. Let's see what it did
that
yesterday.
one hasn't done quite as much. That's flat, isn't it? Yeah.
Okay.
But then, yes,
the other one we were looking at was a Fentra, wasn't it? The other one.
Talking Plug Power up 25%. And then our puppy that we talked about yesterday, Smarter Web opened at £3.40 yesterday and closed at £4.10. So a proper move up. But the problem is when it moves 22% like that, it suddenly takes itself up to quite expensive. So we went through it extensively yesterday, and I would need to see him be able to raise capital at those levels
to be convinced that the valuation is where it needs to be.
So therefore, setting yourself up to get involved in the placings, in the capital raises, could be a good idea.
Yeah, I mean,
as well.
Momentum, I was saying this to quite a few clients on different things recently, but momentum begets momentum. And when there's a stock with wind in its sails, it's very difficult to stop it. Very, very difficult to stop it. In this sector, not just Smarter Web, but the other names within this space. So Vault Ventures, what else have we got? There is Coincilium, Finance, all these different names are all just continuing to attract capital. And it's very difficult to get in the way of it. I can give you a tonic though to your exuberance. There's a company in the States called Bitmine Immersions, BMNR, if you want to bring that up.
This is the problem with going with the lesser ones, right? And instead of buying Nvidia, you go and buy a third tier one.
Yeah, just a startup.
ASML, and you don't get any of the participation.
So have a little look at BMNR. This is one that we've been seeing a decent amount of flow in recently. Bravo Mother November Romeo, Bitmine. So these guys are raising money to do an Ethereum treasury, and Tom Lee of Fundstrat.
Ah, right. This is the Tom Lee one.
This is the Tom Lee play. So the chart looks absolutely disgusting. But if you look back at, say, 15 minutes and just zoom it out a little bit, you can see it traded from. Yeah, I mean, it's gone from...
This was the Tom Lee news.
This was the Tom Lee news, and then that is everybody fading it back.
Oh.
Yesterday, it was off 30-40%. So there are traps out there.
Yeah.
There are certainly traps out there. Please don't forget that, whilst this is a hot sector, you need to understand what it is exactly that they're doing and why it's attracting capital.
Yeah,
the fact that they've just added Tom Lee to the board feels quite inconsequential when he hasn't actually done anything necessarily yet. Tom Lee.
Yeah, is this Oprah Winfrey going into Weight Watchers, that kind of thing?
It could be, yeah, it could be. It could be. One to watch. But be careful out there.
Risk warnings, especially when we are at 6,245 on the S&P 400. Let's take a look at where we're sitting overnight then. So that is the
S&P 400.
S&P 400. It's S&P 7, isn't it?
Yeah,
the S&P 7.
Yeah,
maybe 12. 6,245. We've got tech was obviously strong yesterday. FTSE though, there it is.
Yep.
Ring-a-ding-ding.
Continuing to be strong.
8,900 on our wonderful domestic stock market. Save our stock market. Luke Moore.
Yep.
Where does this put us in terms of all-time highs?
We're kissing it. That's going to be
right there,
isn't it? Yeah, we're right there. Don't call it a breakout.
Look at that. Beautiful.
Yeah, it's good.
So
it's good. It's I think that hopefully the tide is turning, and people are starting to see the value that exists in our stock market. Of course, the company are talking about it a lot, but if you think about what's in it, a lot of miners. And we know that the story about copper is probably one that we're going to talk about, but there is a emphasis on bringing supply back to the market, and so you're going to see revenue start to flow through those names. Finance, of course, financials, banks are doing pretty well. They're sat at the top of their channels, all-time highs as well. X of 2008, but
Yeah.
recent highs. Yeah, look, hopefully the winds are behind our sails, and for an index that hasn't moved as much as the others and hasn't been anywhere near as exciting as the others, let's hopefully it starts to go for us.
And the dollar's kind of behaving itself now, isn't it? The Fed minutes last night showed that, although apart from the two breakaway that called for a rate cut as soon as July, if the economics backed it up, which as of yet have not, then you could potentially see a rate cut in July. But I think that it's irrelevant if it's only two voters.
Yeah, it was
very, very unlikely, and especially after that non-farm number.
Yep. Very boring, really, wasn't it? There wasn't really anything.
Well, I
to say.
said that to Wardy. Wardy sent me through. Oh, the market's going up on the fact that
The minutes,
well,
no chance.
it's irrelevant.
No chance. The market's in wait and see mode, right? At least, sorry, maybe the market isn't. The market thinks there's going to be loads of cuts. The Fed is certainly in wait and see mode because it's getting bullied by Trump. Trump's calling for 3 percentage points to be ripped out of it just now. I mean, if that was to happen, that screams emergency cut. And actually, it would probably have the inverse effect of what he's trying to do. It would probably destroy the dollar.
The problem is, excuse me, and let's just have a look at the yield curve here. So we're seeing the 2-month at 4.37, so obviously no change there. We're seeing the 2-year at 3.86, and we're seeing the 10-year at 4.34. So if we, of course, the 30 years where we've been worried if it's going over 5, but it hasn't. It's come back from 4.95 to 4.87 on the US 30-year Treasury. So not any big alarm bells. But the question for me is, where is neutral?
What exists as current neutral?
What is the neutral rate? If we are so hesitant to cut rates from 4.25, then is there a new neutral?
Well, I suppose you've got to think about where the new neutral is for inflation first and foremost. And let's look at the Fed Watch tool just while we're doing that, just to kind of take a look at where the probabilities currently are. And I'm just going to zoom into here. By the end of 2025, which is this line here, we're moving from, the market's currently assigning a 43% chance we're going to move from 4.25 down to 3.75. So you're getting 50 basis points worth of cuts by the end of the year. So that puts you to 3.75 to 4.
For me, that's absolute best case scenario.
Best case scenario, but I would still say that's not neutral. For me, neutral's probably more, if you've got inflation ticking around 3.1, 3.2%, actually, here's a question, as a kind of more of a macro analyst, would you expect rates to be in line with inflation, or would you expect them to be lower or higher? Do you get closer to where inflation needs to either drive it up or
No,
down?
I think Big Beautiful Bill has taken the neutral rate higher. Because you're getting so much stimulus, the stupid tariffs that keep on coming out every day, there is a real risk that neutral is more like 3.75. So I'm not sure that we can actually afford to have it much lower.
I wouldn't be surprised to see if they were to get down to like a 350. And then you see maybe like a hold or an increase, and it kind of ranges between those two. Because I think they would try to hold it, restrictively high above that level. Where if they think neutral's 3.5 and they hold it at 3.75, they'd be more comfortable because it gives them the space to drop if inflation becomes, disappears for some reason, whatever that reason might be.
If only there was a podcast out there with a global expert on bonds that could explain it for us. Oh, Poppy, good morning and welcome to the show. There he says, what's the art of investing explainer on bonds? That's right. So 9:10 this morning, you're going to be introduced to certainly the country, if not one of the global expert on bonds. He's been doing it for long enough, 40 years. And you will get a chance to meet Poppy on our chat.
Perfect. Welcome.
Exposed.
Yeah. Yeah, you've just been called out.
Who is the real Poppy?
Yeah, you're gonna have to put a picture on your profile, Poppy. That's what it'll have to be.
Yeah.
You can't just be a P now. Can't just be a P. You're gonna have to get involved. Right, the auctions are just opening up. Shall we rattle through some news with what's going on in the UK?
Yeah, let's do a really quick look at the front page of the Times. So we've covered the Fed official. We've covered Bitcoin hitting new highs. We haven't talked about the CEO of X, but we can
have a look at that. We haven't talked about copper necessarily, but we can have a look at that.
Yeah, it's boring.
It's
boring. Yesterday's news.
Last night's news.
Nvidia becomes the world's first $4 trillion public company. We've talked about that.
Mm-hmm.
And WPP finished down 18% yesterday. So remember, we were wondering if it was going to drop below that 448 level. Well, it finished at 428. So clearly, there were the long funds in there selling it yesterday, and longer the day went on, the further it dropped.
Yep, completely. In terms of other news that we've got out there, BAE Systems, we can expect to maybe have a little bit of a move on the open. Yesterday, at the kind of end of Starmer and Macron's visits, they've announced that we are going to be much more aligned with our nuclear strategies, which to me sounds like we don't want to do it on our own anymore. So we're much more aligned, and we're going to get orders for new missiles, Storm Shadow missiles, which are our long-range missiles. They are going to be ordered. So I imagine BAE Systems might move on the back of that. Harbour Energy spun out of Tullow all those years ago, based up in the North Sea. Simon Henry has resigned as a non-exec in order to free up time to get a role at BP. So that's interesting. Pennon Group, Ofwat, so the water. They've accepted Southwest Water's enforcement package, and that recognises the work done to improve their system. So Pennon getting some support there. What else do we have? DCC, their Q1 operating profits modestly was behind the prior year, but in line with expectations. Dr. Martens, do you partake in Dr. Martens?
We talked about this before. I do have a pair. I've never touched the stock, but I do have a pair, yeah. Well,
they've given a quick update ahead of their AGM today, trading in line with their expectations, and the guidance for next year is unchanged, so that is quite boring.
Andrew McKelvey just pointing out, so WPP, what we didn't realise yesterday was that the CEO was due to go at the end of this year. I mean, talk about jumping off the Titanic. And yeah, so the new CEO announcement has been brought ahead, and that is
Cindy Rose from Microsoft, which could be a big appointment.
Yeah,
big appointment,
and due to start earlier than the end of the year.
Yeah, so 1st of September they're coming through. What else do we have here? Rank Group, they now expect their operating profit to be slightly ahead of previous consensus. That's good for them.
And then we just got a couple of ex-dividends. So Halma, 14 pennies. That's Halma Group. And then in the FTSE 250, Games Workshop is 85 pennies. And WH Smith is 11 pence.
There you go. Games Workshop, what a stock. We looked at this last week, didn't we? Yeah. What a stock.
Is it the FTSE 250?
I believe so. Let us know if we're wrong, chat. I don't know. What I do want to do, though, before we cut to a short break, we saw the message before we came on air. JC, if you're watching, you mentioned you're watching and having breakfast with little girl V and that you wanted to shout out. So good morning, V, from us here in the studio. Welcome, and I hope you've had a good breakfast.
Morning, V.
Oh, FTSE 100 producer.
Yeah, I thought so. That was
Games Workshop.
Yeah.
FTSE 100.
Right, we're on to guess this chart. So what country are we in today, producer Phil?
We are in.
It worries me. There was a hesitation there
when you get a.
He's not sure. He's not sure what country it's in.
I've just put the chart together. Let me just check. Yeah, US. It's a US stock today.
Right. Wow. Who's going to be first? So we've had, a couple of decent winners. Funky Gibbon is kind of out there in the lead on the week.
Yeah.
But Hamish over a 2-week period, I think it's 2-2 at the moment.
Okay.
So let's
have a little look.
Let's go. 3, 2, 1, go. Welcome back, everybody. Look at Judas in the chat getting all angry that he didn't manage to get that it was Cisco. Judas boys, come on.
I can confirm that Rich had no idea.
Yeah, I was thinking, is it Micron? Is it no?
I was thinking I think we were both in the same kind of lane.
Techie.
Kind of techie, lower priced, kind
Old
of
school.
IBM, Intel, that kind of thing. But yeah.
But you can't beat Hamish.
You cannot beat Hamish.
Hamish now extends his lead over Funky Gibbon. Oh, Funky Gibbon was a close fourth, if there is such a thing.
Yeah. Once the answer was given to you, then everyone else gets the answer.
Accusations. So yeah, but well done, Parky 77. Well done, the Welshie. Guessing that was Cisco. Right, it's 1 minute before the open, Luke Moore. What are we going to be looking at this fine morning?
Well, I think we've got to keep an eye on the miners just because of this move in copper yesterday. They had a bad day yesterday. I think we're going to keep an eye on that. I'm interested to see what BAE Systems does.
Let's remember, there's not actually a move in copper, though.
There is in the COMEX contract. There's a huge move in the COMEX contract.
They don't benefit from that, though.
No, because
So LME is the only real copper price that matters.
Correct, but there's now a 25% difference between the two. There's a huge difference between the two, which you can trade against.
Which you can trade the contracts, but it doesn't benefit the miners. That's what I'm saying.
No. The miners were down yesterday heavily as a result. So it's going to see how they react.
See if they bounce today.
Yeah, correct. I'm not calling for them to be roofing. I'm just calling to say we need to keep an eye.
Roof.
And then DCC had some news, so let's keep an eye on DCC as well.
All right.
Anything to ring it with?
Well, yeah, there's a good shout from Andrew McKelvey. Will we get a?
I have got something to ring it with.
Will we get a bounce in WPP? That's going to be an interesting one to watch. Do you believe in the new CEO appointment? Cindy Rose, was it?
Cindy Rose of Microsoft.
And what did she do at Microsoft? Do we know?
I will find out for you while you're searching.
Right, Vistry up 2.6%. That was a nice little deal they did with the CMA yesterday. So basically, they were all in trouble for price fixing or talking about their world, and they said to the CMA, tell you what, we'll give you 100 million if you then put that into sheltered housing. Which we'll build for you, and then maybe if there can be some grants that we get the 100 million back, then we're all good. So that's why you're seeing the home builders strong. Seven of them did not admit to being naughty boys,
right?
But they did admit that they'd rather get it over and done with and
just pay it off.
Pay the 100.
Nice. And look at the miners, as mentioned, they are actually moving well today. So bouncing back from the poor performance yesterday, Rio's up 3.5, Glencore up 2.5, and Endeavour Mining up 2.3, Anglo American up 2.3, Fresnillo up 2, Antofagasta up 2.
Is that pushing
Mining.
Our FTSE high? Yeah, there it is, 8929. The FTSE is on fire.
There you go.
Happy days, 8,930 hits. So new all-time highs intraday for the FTSE 100. And let's see what other stocks are taking it there. Standard Chartered up 1.6, AstraZeneca up 1.5. They're coming in for the FTSE, Luke Moore.
Yeah, WPP up 1.3 on that announcement. So Cindy Rose was the CEO of Microsoft's Western Europe business.
Right, okay.
So it's gone from being, I suppose, an operator into the more kind of advertising space.
Yeah,
that's an interesting move.
That's a proper role, though, isn't it?
It's a proper role. Yeah, President of Microsoft Western Europe.
Right, Marks and Spencer is up 1%. Bats, even they're coming in for the defensives. I'm not sure if Bats continues on. I'm going to have a little short of that.
Bats were they were upgraded yesterday, I believe. There was a note out that re-ranked.
As long as it's not this morning.
It was, let me tell you what it was yesterday specifically, just looking at the tobacco space.
Right, so I am just putting out a little short in Bats there because I am very long FTSE at this level in the futures. I think that everything's been marked up on the open, and I'm not sure they'll continue to take the defensives higher. such as BAT, such as Imperial, such as Vodafone.
It was Jeffries yesterday. Jeffries reinstated their tobacco coverage, making British American Tobacco their top pick and downgrading Altria to an underperform, so preferring BATs as opposed to Altria.
Did it give a price target?
It didn't in the text that I received, but I will find one for you.
Let's see. Right, Glaxo up there, Relics nearing £40, Reckitt's and Diageo also getting marked up on that. Legal in General 252. Let's see if there are any losers on the morning. With the FTSE at new all-time highs, who is not participating? Well, it is, yeah, there's Severn Trent.
Severn Trent off the back of that restructuring kind of chat.
WH Smith is ex-dividend, so don't worry too much about that. And yeah, that's about it. Shall we have a look in Europe?
Yeah, have a little look over there, and I'll try and find this
right. We've got Peugeot, Michelin are both up around 1.5, but not too much else really coming to the party. Gucci up 1% at 202. Over the 200 level, that is interesting in itself and worth highlighting. Then we've got Siemens, Bayer, a few German names there.
There were stories about there being as part of the kind of ongoing European-US trade deal, that there was going to be a quota on car imports. So I'm not surprised to see the car manufacturers moving around a little bit.
Right.
To be fleshed out, of course, because we're now kind of, Europe is dragging their heels a little bit because they know they're probably going to get a better deal if they do so. But yeah, there was rumours they were going to be accepting the tariff rate, but with caveats, which is what they said last week. And those caveats are going to be that they want to import a certain amount of cars as a quota. So that's going to be interesting to see.
I just checked, Ferrero's a private company, is it?
Ferrero.
I've never traded it, so guessing it must be.
Ferrero, the company. It is
Lindt.
not a stock.
Lindt's the only other chocolate maker of that area, isn't it?
An Italian family-owned company since 1946.
Wow.
Big moves.
And now they fancy some cereal.
Yeah, exactly.
Ferrari hasn't done much, has it, for a long time?
No.
Same price as it was September last year.
No, hasn't done much at all. I mean, they work on the kind of scarcity model, don't they? So you actually can't just go and buy one. You have to wait on a waiting list and have one before and trade in and trade up. It's a very convoluted model. I don't know, but it's done well over time. But
yeah, we haven't had an update on Aston Martin for a while. Producer Phil just popping that. Oh dear, what a absolute!
It's just not worth looking at.
What? Well, it's worth looking at to warn people just how bad this thing is.
There's an incredible gap between the prestige on the brand and the ability for the brand to operate as a company. Yeah. I still think, for me, an Aston Martin is my goal car, right? You know, it's got the kind of romanticism of the James Bond films.
I can imagine
I would love, to be pinging around somewhere in an Aston Martin. If they're even going to exist as a company by the time that I can afford
they'll definitely exist, but whether they get bought, I do not think they should be public.
Do they get bought by somebody?
Yeah, it's a love affair with the company you have to lose that money each year.
What does that market cap now exist at? Martin market cap. What do you reckon? Over or under 10? No, over or under. I could be a poll, actually.
Okay, yeah.
Let's run it as a poll. Over or under, go 1 billion, 3 billion, 5 billion. I think that might be a bit too, is that too high? 1 billion, 3 billion, or 5 billion?
Yeah, what's closest?
Okay, yeah. I mean, it's not going to be a big number, is it?
I mean, Burberry is 2.5 billion, I think, or 3 billion, something like that.
Okay.
So
maybe tighten the spread a little bit. Go to 1, 2, or 3.
God, is it that cheap? That is scary.
It is.
Well, yeah, I mean, for all the money that's spent on things like Formula One,
it's insane.
Then why doesn't
actually, there was a story about Formula One yesterday. I don't know if you covered it yesterday. Did you see that Apple were interested in buying the US rights to Formula One?
Ah, yes.
So Liberty Media, of course, took them on, I would say 10 years ago now. But the success of the F1 movie has got Apple interested. Take a stake in the rights.
You've got a bit of a story about Apple, wasn't it? Now, people laughed at me at the weekend, a video that I put out on TikTok saying, Tim Cook, absolutely terrible, has to desperately do something to catch up in AI. And there's now
stories about it. So look, you know about my love affair with Perplexity. We've done podcasts on it. We've spoken about it on the show. And last week, I think it was you and I, or maybe someone else, we were talking about the fact that Apple doesn't necessarily need to build its language model. Why does it need to? The obsession with having to build its language, the LLM, when there are some very, very good LLMs existing that are now
Yeah, they're too far behind.
They're too far behind.
Because Cook is useless.
So
at innovation.
What do they do? And if you pop my screen up, there are rumors that Apple are looking to acquire Perplexity. Now, it's been called out by Dan Ives, most recently on Twitter, but they're starting to face a little bit of pressure. Can they make an acquisition to catch up in the AI race? If they do, Siri becomes one of the best and most used models of all time. There's a fantastic Twitter account. Well, the guy that runs Perplexity, Aravind Surinas, I think his name is. He's very, very good and vocal on Twitter. And he was basically saying they're finding that a lot of the requests for their voice mode are coming from Siri. And they did a poll, and they found out that people are going, ask Siri to ask Perplexity to go and do something.
Really?
Yeah, and I think that's in part of where this is coming from. And so maybe that's his version of a come and get us kind of play,
right?
To try and spin it. But yeah, interesting. I don't want this to happen as a Samsung user because I would hate for them to take Perplexity away from me. But it's a brilliant tool. I can see that they would massively. It would just give them the leg up.
Yeah,
just give them the leg up. And there's other news as well in the kind of LLM space. The other big player, the other big kind of thing that I try to use over here is Anthropic, specifically their Claude model. And Claude's what we use here at work. Amazon are throwing cash at Anthropic. So Amazon have said that they are going to weigh another multi-billion-dollar into Anthropic to deepen a strategic alliance that the tech companies believe will give them an edge in the global competition. So it already has plowed $8 billion into Anthropic, and they're going to put some more in. Now, Anthropic has also got an incredible board of investors. They've already got a lot of money from Google. It's part of the reason why I bought Google for my long-term ISA account, because I just wanted to get some kind of exposure. But they're building a huge, where is it down here? Amazon have outlined the scale of the first site. They're going to start to build their own chips. They're going to start to build their own data centers. Project Rainer. Now, in comparison, the site in Indiana they picked is going to be taking 2.2 gigawatts in power once it's completed. And that is almost double the next biggest one, which was Oracle's campus for OpenAI in Texas.
Wow.
So it's, Amazon are having a push. So there are some things moving around in the kind of mega tech space.
Yeah.
We've just seen that TSMC have had some incredible numbers. Now you're seeing that Amazon wants to be able to get into the party. You see that Google have announced their own TPUs and that they're going to be making more in that space. Are Apple going to look at Perplexity? The story is continuing to run. There's more going on than you might think.
I'm slightly, my attention is being taken by Glencore being up 3.5%. I've got them in my ISA and my SIP, so I am going to let my SIP go here. 309. I think we got into these about 260. I think it was. So there we go. 308.70. I'm going to take that.
Talk to me about the miners then. So yesterday they had a big move lower because of these copper tariffs, right? If the cost of anybody sending copper into the US against their benchmark is up 50% as a cost basis, that's going to be more expensive. So that made sense to me. The bounce today, just walk me through that. Why do we think they're bouncing?
Well, first of all, we've got to remember that the vast majority of copper does not go to America.
It goes through the LME.
No, sorry. So the US produces 50% of the copper that it consumes.
Correct.
China is a big importer of copper.
Yep.
Right? Just as Europe is and everything else.
Tell you what, I can give you a graphic whilst we're looking at this, just while it's on there. So yeah, you're right. This is the US That bit at the bottom didn't quite work, so I'm gonna just put it on there. So yeah, you're right. The US produces 50% of its own domestic production, and it has to import 1 million tons annually. And where does it get it from? It gets it from Chile, it gets it from Canada, it gets it from Peru.
Yeah. So Canada sounds like it will be included. So you can add that 17% into.
What do you mean, included in the sense that it's going to be given waivers?
Exactly. In the free trade agreement, then there will be no charge for copper coming in. Rios has a mine in the US. Freeport McMoran has a mine in there. But there are also 3 options. You can just defer to scrap copper. So the price of scrap will go up. You can use that instead. So there's a lot of substitution that can be done to take that dependency down. But it doesn't really make sense to me with regards to everything he's doing for AI, right? So maybe there'll also be, if you're building an AI data center,
you're going to need to consume more.
But you also get a pass.
So
and because you're building infrastructure for such a security dependent, then you may also get the copper at the LME rate. So I think there's, is it just yet more hot air from Trump? Does he really want
to put the price
copper production domestically? Does he want? Is that what he's aiming for here?
I think what he's aiming, as per I think the tweet, he's certainly calling out AI, he's certainly calling out battery, he's certainly calling out requirements on the grid and infrastructure investments, all of which, any kind of transition of energy, you're going to need copper.
Yeah.
And so if they really want to become fully energy dependent, they're going to need more copper. There's no doubt about that. Because they're only consuming 50% of what they need. So they either try to, I don't necessarily think this is trying to ramp up domestic production, because you can't just bring copper.
He has said that. He wants more.
But we spoke about this. I think you had someone on at the start of the year when we were talking about one of the key themes for this year will be the copper rally, because there is just zero supply coming onto market in the next 3 to 5 years.
That's it. So
it's not easy.
We've been pushing this story ever since Goldman's. What was his name? Jeff. There was a great analyst at Goldman's in 2022, and he was shouting for $12,000 copper. But since, it dropped down, as low as 8,000, I think. But if you just want to pop up Glencore there. Now, Glencore also have a trading business. Now,
I've become interesting.
Well, I think they've definitely got. If anybody knows what's going on in the commodity market, it's Glencore.
Yeah.
So you see volatility like we're seeing between the spread of LME and HGA, then they're most likely to benefit from it. Goldman's even went out with a piece last week, which Nick Feingold put out in his community, saying that the spread was only at 13%. There's a much bigger chance that it'll be a 25% tariff or 50%, which nobody really expected. That it was still good to buy the spread between COMEX and.
Well, that's it now. What's the spread now? It's going to be more like 15.
No, 25.
It's going to 25. Well, there you go.
Yeah.
There you go. It's.
But that's because
you can monetize that, and you could on our platform trade one against the other.
No, you can, but the time to do it was last week when Goldman's called for it. The time.
It's in the expansion.
Yeah.
Yeah, but no, sorry. You can now fade the gap if we taco and get walkbacks, and you get the COMEX contract come back to.
I think that's why it's only at 25 to 28%, because there's the chance that he will bring it back in. If it was trading at 50, 100, of course you trade that.
Yes. Sorry, as in why is the gap not 50 when the tariff is 50?
Yeah.
Got you. Yeah, okay, sorry, that makes sense. Yeah, so that therefore, because it's halfway through, 25%, that is the arbitrageurs selling it into the buying pressure in the case that it does collapse back.
Exactly.
But the good thing is you can trade both on our platform. You can trade both. And actually, there's probably a good distinction to make. High-grade copper on the platform is COMEX. This is the US futures contract.
Correct.
The market that is just called copper is referencing the LME price. So just there's two differences. They're different numbers. They represent different metric tons and measurements, et cetera, et cetera.
Well,
but
So the HGA is $5.64. So you take that $5.64 per pound, multiply it by 2,240, and you get 1 metric ton, which is the LME price. Because it's a London price, don't get mixed up that it's in sterling. It is also in dollars, because that is the global price of copper.
Yeah. Cool. Nice.
Right, it is now 8:18. We're going to bring Angeline in.
Yeah.
Now that she's recovered, she's got to catch up for her day off on Tuesday.
Don't call her out for that. You did well. Come on. I watched your show on Tuesday. You were being very nice to her.
We were being very nice to her. She deserves it, and now she gets the other side of it.
Exactly.
Right, we'll see you in 2 minutes.
Let's do this. Hello, Pat Cat. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, welcome back, trader friends. It's myself and Luke, and that quick changeover. Sorry, did there.
I haven't even got a chance to sit down yet. Rich, when he's here, he's got a little bit of movement going on. So I've decided I'm gonna emulate. I'm gonna stand up.
Nice.
channel
Also,
your energy, yeah.
what I love, Luke, but I always know when you've been here at my desk.
Why?
Because the monitor is so much closer.
Yeah, you need to see where you
Luke
are.
also has, visual challenges, shall we say,
Wow.
with myself. Rich and I also have, very high
Everybody does. Yeah, we're just staring at screens all day long.
charts all day long.
Exactly. Yeah.
Speaking of that, the FTSE is just rip-roaring. Take a look at that, trader friends. Woo! I mean, this is just got, this is the weekly chart here, but just showing you the daily as well. Look at those green leg ups there. Phew. Lots of strength coming from healthcare, material stocks. We also saw many of the miners had that bounce earlier. Also, I'm thinking about contrarian rich portfolio.
A contrarian rich portfolio.
Yeah.
So what? Short rich.
So every single time he says, Ange, I don't think, late last year, I don't really agree with your defense stock strategy. I don't really think, government's already now not having enough money. I would not do that.
Yeah.
So I went, okay.
And look at how that's
Put
played out.
money into that. And then this morning we had this conversation. It might be for multiple factors, but I said, look, I have this feeling that, the Rios and all that will have a bounce.
It's an impressive move. You've now got Anglo-American up 4.8%. You've got Rio's up 3.9%. It is a very, very impressive
Look at
move, as we
that
were just talking
move.
about. Yeah.
That is. This is a 1 minute chart, trader friends. Just showing that to you there as well. Also checking my phone because I did message John Mayer, who is one of the top mining
mining
analysts,
Yep.
and to find out his longer term view. And he has indeed just sent me his note. And in terms of copper, it is a busy Monday and it's also a busy Friday. We're going to try and get him in. Copper is actually saying here that this saw a 24% premium between London and US prices. However, elevated premium in the US expected to see continued flows into COMEX warehouses as traders look to take advantage of the arbitrage opportunity before tariffs set in.
So that was what we were just talking about then. So the fact that it's only trading at a 25% premium instead of a 50% premium, which is where the tariff you would expect it to be, that's what they're doing then. I just also want to call out, we were talking about Aston Martin and we have got the results of the poll, and you're right. I mean, it is a stinker. For everyone that guessed under 1 billion, the market cap for it at the moment is 800 million. It's so small.
Oh, yeah.
It is so small and it's falling at a rate of knots every single time that we look at it. So, yeah, the Aston Martin not doing well.
Yeah, I mean, this is like every single time you think it's not going to get worse,
It just continues to get worse. It just continues to kind of degrade.
Look at
And
that.
I know you're into your cars. Have you ever had an Aston Martin or driven an Aston Martin?
I am lobbying. Sounds really, really cheeky. I am lobbying. That wasn't dirty. Lobbying's not dirty. I was lobbying a neighbour down the road.
Yeah.
To have a Aston share because.
Oh, you're going to buy one and share it?
He just leaves it. He just leaves it, and it's parked on the side of the road. It's also my favourite colour, which is a gunmetal grey.
Yeah, nice.
For the Aston, right? And he does not use this car.
Not at all.
It's not even on his drive. It's just sat out there and just, yes, thank you, yes. And he occasionally, takes it to get it valeted and clean. Gets clean. Does he need help? Yeah. So I was like, why don't you just give me like a once a week? I love it, but not, it's still expensive, right?
Yeah, yeah.
But I have last weekend or the weekend before driven the Xpeng. And 6, and also the BMW X5, and now been invited to Bel Air House. By the way, if those of you who want to go for a free test drive of the latest Model Y and X, they're doing it at Bel Air House tomorrow, 11 to 5 p.m. I have driven both, so I am not going. But yeah.
My only Aston Martin story is I was once dating a girl when I was at school, when we were kids, and her dad had one. But unbeknownst to me,
crash it?
No. I was 15 at the time. Unbeknownst to me, I've walked in. They just said, get a can of Coke from the garage. It's just in the fridge in the garage. Cool. So I opened this door and I was like, bam! There's Aston Martin. It was absolutely stunning. Neil Brewster, great shout by the way. Philtronic. We've spoken about the space stocks. If we're seeing a bit of a defensive bid across the rest of the market, Philtronic creeping up towards its all-time high. Seraphim Space also up 3.3%. So we are enjoying that. Yeah, look at that Philtronic move.
I love Philtronic. I have only one bugbear.
What's your bugbear about Philtronic?
So
Didn't buy enough.
I have bought enough, I think. My bugbear is I feel upset that I cannot buy more for my pension because their PE is very punchy. They're up and coming. A lot of their business lines are still not. If I pick up let's go to the fundamentals page here.
Say, yeah, have a little look at what their PE, normalized PE ratio of 118. Yeah, that is pretty lumpy.
You're right. And the point I'm making here is that to me tells me that investors have baked in a lot of growth already, expectation.
Yeah, completely, but for good reason as well. They've been getting more and more contracts from SpaceX to supply pieces to their rockets. I mean, their most recent one was back at the start of June, where they got a $32.5 million contract with them, which is great, for a company that's based, I believe, out of Cambridge somewhere. Fantastic for them. But Seraphim Space is another one. If you want to get exposure to the space sector as a whole, Seraphim are effectively an investment trust there that owns lots of publicly traded vehicles and privately traded vehicles with everything around the space sector. So if you say SpaceX are the kings of launch, which they are, Seraphim are the kings of everything else. So they've got investments in kind of space taxis that move things around once SpaceX gets up there. There's a fantastic interview by one of their by the Seraphim fund manager, and they were saying, if you imagine SpaceX is a train, and they're going to take you to the train station, right? They're going to take you to wherever they're going.
Yeah.
You then need somebody to then take the bits to.
You need the rest of the tube line.
Yeah,
right?
you need the tube line, or you need a
Exactly.
taxi to take you to where you're trying to get to. So there's some investments in Seraphim that are really, really interesting.
Seraphim as well, interesting in that it gives you sort of the satellite, all the rest of the bits that are needed for that kind of space logistics to work.
Correct. A lot of them are revenue generative as well.
Yeah.
So there are weather companies up there that are using satellite to get real-time weather. There are companies that have got military contacts that are going to go forth and then move into the kind of retail space. The comparison they used was GPS. GPS was initially built as a military technology. It then transitioned into, I suppose, the consumer market, and now we've got GPS everywhere that you look with Google Maps and Citymapper and everything. If you could get a real-time view of the weather, where you could see, right, I can see where the clouds are moving around. I know specifically how long it's going to take me to get from my house to the office to the train station. I don't need an umbrella today because you can see it all generating and moving. Those kind of things just become the next paradigm of the eyes in the sky.
Yeah.
So there's some really cool things going on.
Filtronic as well, if you are in the space, trader friends, one thing to really remember about Filtronic is it is almost like a play on SpaceX, right? They've just had this contract with SpaceX, but also, it's almost like that. If people don't want exposure to SpaceX and US denominated assets, then they look to Filtronic. And if I show you the weekly chart, trader friends, you can see, look at that rise there. Very strong indeed for Filtronic.
Don't forget, if you do want to try and get some exposure to SpaceX, they're now officially the largest holding in the Scottish mortgage portfolio.
Really?
They are now, yeah.
Interesting.
Yeah, I think somewhere between 5 and 6% of the assets under management that, or the NAV, sorry, at Scottish Mortgage is now SpaceX. So the biggest individual position.
Speaking of which, Leonardo, let's just check on that, because Leonardo is one that I keep an eye on for any news in this sort of like satellite space. I believe also Rich talked about Ferrero earlier on today. Is that Ferrero he mentioned earlier today? Ferrero.
How did you go from Leonardo to Ferrero?
Just taking a look at the space.
Yeah.
You need chocolate in space, I'm sure.
I'm sure you can. You have to take it with you, though. You definitely have to take it with you. I'm not sure you'll get it up there.
Yes, it's probably going to have to be rehydrated or something crazy like that, right?
Yeah, something like that.
I've heard really crazy things about space food. Time to wrap up. Leaving you with something sweet. Just pay attention to this because Ferrero and Nutella appearing near to a deal to buy Kellogg's.
Yep.
According to sources quoted by Reuters.
We had a quick chat on that one.
Yeah.
At the start, so we'll have to see how that one develops, but it was a 51% premium. Keep an eye on it if you're going to be doing the opening bell.
Yeah, totally. Right. We will be back. Stay with us. Go get your coffee. Go get your tea. Because we got Nick Feingold up next with Rich.
See you later.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Good media training.
Welcome back. We've got Nick Feingold back in the house, ladies and gents. How are you doing, sir?
Pretty good. Bit of a rough night, but apart from that,
I was going to say, you're dressed up very smart.
yeah.
Is that from last night or is that for today?
It was a similar outfit, different shirt, different
Right.
bits of attire, but looking pretty much the same as I did last night, yeah.
And I hear you were out and about in Chelsea.
Just a little dinner with friends, but
Right.
a few extra friends showed up, so went on a little bit longer. Not too bad, 11 o'clock.
At a restaurant which we're not going to mention because we wanted to keep it a little secret. But
Frantorio.
what's...
It's not a secret.
You've done it now. Well, maybe we can get a free drink when we go in there, because they already offer free drinks for who, Nick?
For gingers. And I'm not sure if you're ginger or just sort of tingy, browny. You know, you might be there for a free drink. You never know.
If I grow my beard, but our ginger friend out in the studio there, his ears have just pricked up. Where do we get free drinks for gingers? But right enough that
One free drink.
one free drink,
I want to say free drink.
and it's on the menu.
Yeah.
That's brilliant. What great marketing.
Good.
Right, why are we here today then? What are we going to look at?
I don't know. I thought we'd have, our industry's pretty bad about talking about disruption of itself. It's very good about pointing out disruption of other industries,
Yeah.
but there's a lot of entrenched interest in the financial services industry, making sure that everything stays the same. But I thought maybe we have a little chat about what I think might happen with AI in financial services, other than the fact that entire research departments could be replaced, by Perplexity or Claude or Anthropic.
For those, it's been a few weeks since I've had the joy of having you on. Just remind everybody how entrenched in the financial services industry you were for many a year.
Well, I've just been what people used to call a stockbroker. I'm not sure they exist anymore. It's all machines, but 40 years of getting it wrong. It's good.
Yeah, and not only working for the big names, the Deutsches and Bear Stearns, but also setting up your own stockbroker.
Didn't work at Bear Stearns.
Sorry, not Bear.
They had a go, but I didn't do many. I was at NatWest, and then I was at I started at Wood Mackenzie, then it became NatWest, then I went out to New York, then Deutsche, and then I started on my own. So I didn't work at too many big shops.
Yeah. And it's set up. How many years was your own going for?
My own
Execution.
15, something like that.
15 years.
I think so. It's good fun. It's just your average stockbroking firm with the mini golf course, bar, karaoke wall.
In the office.
In the office. Yeah, it was a sports bar with dealing positions is how I would describe it.
The original WeWork of finance.
Yeah.
Yeah.
But anyway, we started, we've just taken that all online now, and we have a investment community of high net worths, ultra high net worths, not so high net worths, like myself. And there's about 300 of us. And, we started to use all the new tools to get the messaging across. And so we can, I personally believe that, Goldman, Morgan, Merrill, all of the big shops, they'll end up looking like film production studios. Because very simply put, a lot of managements are are just not great about getting their message across. And that doesn't mean they're not great managers. It just means that they're not great media personalities. And therefore, if you can tell a story using a video, you know, and now we live in an era, and I think maybe we'll show it to the people, where you can make $1 million Super Bowl advert for $5,000. You know, I think that changes the game. That's how you hit 1 million people. That's how you hit 1 million retail investors. That's how you make sure the messaging is consistent and perfect every time. And that's also how you capture and hold their interest. So, you know, I think, you know, from a stock point of view, you know, Google's really, or Alphabet is really starting to interest me. I think YouTube could, well, what I think it probably will be or is the biggest, most valuable media asset in the world. I mean, you can try and build a streaming service, right? But try and put 100 billion hours worth of content in one place to rival YouTube. And now what's going to happen with AI is the content quality is going to get much better, and there's going to be much more of it. So I think, you know, you're in the first and second innings of YouTube's development, and my gut feel is it could be worth Alphabet's entire market cap one day. And that's going to also grow, you know, as you need to store more stuff, cloud storage is going to have to grow, and so Google Cloud would probably start to grow. And then you've got Waymo versus, if 80% of Tesla is autonomous cars and robots, then, you know, Google's in those spaces. So I think there are 3 or 4 businesses inside of Alphabet which could be $1 trillion.
And indeed, last time you were on, we talked about Tesla, and this was Morgan Stanley. Well, the first time I've seen them come out with this content, and it was a video content piece on Tesla. And this is the kind of thing that we're talking about banks, brokers doing, and companies themselves doing a lot more of. Now, let's watch this video, which Nick has helped produce. And
well, we should tell people that you know, if you're interested in joining our investment community or our club, that we produce this advert for you know, for our own fun, really, to try and do a subscription drive. You know, but if anyone's interested in joining us, it's Fat Gladiator, Nick at fatgladiator.com.
Before you press play, while you're watching this video, check out how many faces you recognise involved in the finance community, right? So check out how many faces. Here we go.
If you were to build a revolutionary investment club, one that collects the very best ideas, curated by the very best people, what would it look like? It starts with a powerful community. The most talented, unhirable individuals cooking with the very best ingredients. Their collective intelligence, it's the engine behind a model portfolio that returned 47% in 2024. The club reimagines how financial insight is delivered, favoring themes that reduce risk and maximize returns. We invite first-class speakers, world authorities, special guests, sharing insights you won't hear anywhere else. We use advanced technology to scan the internet for trends and identify the companies most likely to benefit. Then we collaborate with award-winning filmmakers to tell those stories uniquely, so that the club's members can quickly capitalize on these trends, all while giving members access to the very best management teams and numerous benefits that amply cover the cost of the subscription. To find out how to join this revolutionary investment club and access a host of benefits too numerous to mention, visit curationcollective.org. Our model returned 47% because we focused on this.
In case you didn't get it.
I mean, that's incredible. Tell us how much that cost to produce, because that is a proper standard film.
That's $5,000, 3 days work. So the software is a couple of $100, but the guy who knows how to use it is about £1,000 a day. There's 3 or 4 days, you know, plus that. So, and I can write the script by just talking into ChatGPT and say, this is what I'm trying to do, turn that into a 60-second script, then the 60-second script comes out, and then or 30-second script, whatever it is, then I can go to work on the script. And that's, I mean, by the way, WPP down 17% yesterday. Guess what's happening? Like the agencies, I mean, I didn't need an agency to do that. I think you agree it's pretty high quality work.
Yeah.
Right?
If companies are able to do that themselves without going to an agency, then what hope does the likes of WPP have? So that's one industry it's very evident in, but you also think this can come into finance and help companies themselves with the investor relations push?
Yeah, I mean, it's going to revolutionize the way that companies tell their story. As I said, you know, BMW, I'm making up the numbers, they might spend 100 million on telling you why to buy the car, try and find a decent piece of content as to why to buy the shares. You know, there might be some influencers or some, you know, TikTok stuff, but it's pretty, they do a pretty poor job. So I'm not saying BMW do a poor job. I mean, the industry is not embracing these tools. So we've built, as you know, ShareFlix, which is Netflix for stocks and shares. The Flix bit is coming. I can't paint a scenario by which companies wouldn't want to turn their equity story, visualize their equity story, and you know, not have a monosyllabic sort of middle-aged white guy talking into a Zoom call for an hour.
Yeah.
Now, that's an important part of the process. You've got to understand the company, but the way we present the content, the way we curate the content, the way we summarize the content, and you know, we just don't have to bore people to tears in order to get them to buy stocks and shares.
Well, that's because everybody turns off after, you know, 30 seconds of hearing a traditional investor relations. But, you know, you get a video like that, not only is it entertaining, but it's also informative. And, you know, if we were to talk about a European steel company, for example.
Yeah, that could be quite boring unless you do it in a certain way. Have you lined that up as well?
Not the video, but I do have the OG Fat Gladiator here in front of me. So let's have a look at ArcelorMittal, shall we?
What, you want me to talk about it?
Yeah.
So, you know, look, it's not. I'm a simple bloke, right? The stat that hit me hard with Mittal, right, was that they've bought back 38% of their market cap post-COVID, when the market's been awful, right? So it's historically not been a great or that much of an interesting name to sort of own, but you know, there are a couple of companies in the share buyback space that have all done very well. Barclays is buying back 50% of its share cap through dividends and stock repurchases over the last 3 or 4 years and going forward. And Mittal, you know, there's a lot of things changing. There's a post-Ukrainian restructuring play, which is they have one, I think, furnace in Ukraine and 2 mothballed, which they can get back into production. Okay. So if ever the war sort of is over there, that's gonna be an interesting. It's gonna be an interesting place to be.
Which is not really talked about.
Not really talked about, no. And we spoke to the company last week. They haven't been bombed. The sites that they have, so that's potentially interesting. Then you've got the German infrastructure play. So conditions in Europe have been harsh, but may improve as well. Yeah. Then you've got the US.
And the big drive, right? Because we're seeing defence. We saw what happened to Salzgitter yesterday when suddenly we found out their steel can be used for defence. You've got the German infrastructure spend coming 4 years after that, don't you?
Yeah, and maybe more interestingly, it's going to be a lot more difficult for China to dump steel in Europe and the US. Yeah. Then you've got the US Nippon steel deal, where Mittal end up with the 50% of Calvert that they don't own at a very good price. Right. You've got them investing in 4 or 5 projects, you know, in terms of efficiency projects and new projects, which will bring on 1.2 to 1.8 billion of EBIT. So here's a company that's been doing pretty well while things have been terrible, right? It's bought back 40% of its market cap post-COVID. So sort of, you know, look, I don't think it's not a, you know, super sexy. It's not Palantir, right? But so, you know, I think you know, after last quarter, which was probably the best quarter I've ever had in my career, performance-wise, you know, it's a little bit. I write this weekend to my club. It's a little bit like Barclays Manager of the Month. You know, you're going to lose the next 4 games. Right, for certain. So I'm sort of trying to posture myself a little bit more defensively. I mean, another really interesting name. Have you ever heard of eBay?
Oh, yeah. Never used it. But
Really?
No.
Funny, they look like recycled clothes. So it's,
No, excuse me. Do we want to get onto your shoes there?
no, leave my
How
shoes
old
out
are
of
the
it.
shoes that you have on?
They're 15 years old.
15 years.
Yeah.
But a wonderful pair of £2,500.
Yeah, I wouldn't disclose how much they cost ever.
We're talking about on eBay.
eBay, yeah. As I was watching Love Island with my 19-year-old son, for research purposes,
This is last night.
I noticed the eBay adverts.
Yeah.
And then here's a stat. In 2013, the share count of eBay, 1.25 billion shares in 2013. Yeah. Okay. Today, 700 million. They've bought back 62% of their market cap.
Right.
Right, since 2013. So, whether there's a place for value tech, that was another one. So,
Can you get that up, please, guys?
I think you'll be amazed. And also cost of living crisis. I've noticed my kids starting to sell more stuff online and recycle more stuff online.
Yeah, they're a lot more conscious at that age, aren't they?
It's all right.
That's either going to be a breakout or a double top, isn't it? But if they're imagined to turn this business around properly, and we've got a bull market.
Well, I don't think it's like Metal. They've bought about 40% of their market cap. eBay's bought about 60% of its market cap. I don't think, it's, I don't think it's, if you're looking for sort of sex and drugs and rock and roll and violence, maybe eBay isn't the stock for you. Maybe Metal isn't the stock for you.
Well,
if you're looking at putting something away and being able to sleep at night, where there are potential really interesting catalysts because of the macroeconomic environment in which we live, then I think that it could be there. But they're like two interesting names.
And run us through then. Obviously, fantastic performance in the last quarter. Chart off, thanks, guys. And then now that the market's had a move, what I continue to find, and what I'm told is going on on the Discord channel as well, a lot of people are buying things, right? In a bull market, it's very easy to buy things. What do you think of the market overall at these levels from your X number of years of experience of seeing such kind of markets?
Look, it is, and this is the cut and thrust of our business. It's the empowerment of retail, right? A third of the market is passive, a third of the market was institutional, and in North America, a third of the market is retail.
Yeah.
But if you take out passive, it means 50% of all active decisions are now about retail. Mm-hmm. Most of the companies we speak to don't know that our investment club exists, so we have to call them. Most companies don't have a budget for talking to retail, listen, I listened to the Elon Musk earnings call, right? And after that day after I called you, I think the stock went up 35%. 6 weeks later, it's probably uninvestable because of the fight he's having with Trump, right? It's just changed like that.
Yeah.
Until it's not about fundamentals anymore. It's about politics, and that's really, really even more impossible to call. Mm-hmm. But the first hour of his investment call last quarter was retail. Institutional shareholders got to ask 6 questions at the end.
Wow, really?
Warren Buffett, right? Last Berkshire meeting, spent 6 hours talking to retail, right? At 94.
Yeah.
And for whatever reason, public companies don't think that they require a retail strategy to court retail, to talk to people in a language which is deeply simplified. And that's not in a patronizing way. It's just that our industry decided to invent a language that was was designed to cast intellectual superiority over its audience. You don't need to do that. Most people understand that, autonomous cars are coming, but autonomous tractors are more likely because you can't hit anything in a field. Yeah. So let's have a look at John Deere, and those those tractors will be solar powered because they're on farms. So retail is the answer. Retail.
I think this is at the heart of, so IG's doing this Save Our Stock Market campaign, right? And we know in this country, the ownership of stocks is below 30% compared with over 60% in retail world in the US. So for somebody who's been at the heart of the industry for so long and seen everything, why is the understanding of investing so bad in this country?
Well, I don't know that it is so bad. It's not as advanced as America, but it's a lot better than a lot of other places. But there's a capital markets crisis in this country because our pension funds have invested in better stories abroad. And there seems to be this idea that if you float in New York, that's going to solve your problems. I mean, we spoke to OTC Markets. They've got 12,000 public companies with dollar-based quotes, right? But they're just as stranded over there. So the idea that an American can't buy a UK stock on its iPhone is crazy. It's the stories and I mean, you know, Musk will come out on the earnings call and go, we're going to have 1 million robots, or, you know, by whatever date. Or maybe we do, maybe we don't. But it's a bold ambition. For some reason, our companies are scared to have that bold ambition, and because I think they feel suffocated by the regulation, that if they were to say something that was bold or ambitious, it might not be within the regulatory framework that we have. But we've had great chats with the regulator, and the regulator, you know, obviously they want to protect retail, and they don't want companies saying things that aren't you know, factually accurate.
Absolutely.
But there's nothing to stop people from having bold ambitions written into the regulations. There's nothing to stop people from producing content that's interesting, engaging, especially to retail investors who require not to be bored out of their brain in order to buy a stock. So the research that we've done is that, you know, however long an institutional investor may take to research a stock, but in retail land, it's about 3 or 4 minutes. Right?
Before they hit the buy button.
Right, because you've got 1 million people buying $500 worth of stock. You haven't got, you know, Fidelity buying 5% of the company. So it's a different process. And, you know, that comes with, you know, that comes with a health warning, which is, I think what retail investors are probably doing now is going, like, well, AI, you know, conquers all and increases the productivity of every single company out there. And we've lived through that with SPACs, right? So, you know, you have to be careful, but you've got to be nuts to fight, you know, stand in the way of it.
And when it comes to where there's a lot of ideas on the chat, but the great thing is it's the community putting their views in, right? And you've got a certain high level.
About our club.
The club, yeah. You've got a very high level of people. Well, take us through ones that have been in the industry.
Well, I describe it as an unhirable pool of talent. You know, we've got ex-hedge fund managers, we've got, you know, that we could never hire, but they participate, and ex-brokers, ex-financial professionals with years and years of experience. But also, you know, it's about humility. It's about understanding that there's no guru in our club. It's not, don't join our club if you think it's about Nick Feingold telling you what's next. As I said, you know, get Barclays Manager of the Month, you're going to lose the next 3 on the bounce. It's about the collective intelligence of the network. It's about that we're better together. If I call up Meta and say, will you speak to Nick Feingold, then I'm unlikely to get a response. But if I call up and say I represent the community of X thousand, you know, high net worth individuals, we're more powerful together. We leverage that community to get discounts on, you know, on great content and value-added products. So we just work together as a community. And actually, what's really unusual about the club is that most of the recommendations come from the members.
Yeah,
I just sit in the middle of a bunch of people that are much more intelligent than me.
And as it builds for a show, you've had the Mittal management call. You've had Smith's Group.
Yeah, we did Smith's Group the other day. You know, our message to them, if you're watching, is now you've done liquids, so we don't have to take our liquids out at the airport, and now we don't have to take our laptops. That's all Smith's detection.
What a world of
now, because you invent something that means I don't have to take my shoes and belt off. That was our message to them.
Right.
Again, I think retail investors would understand.
Those shoes.
They're actually making a molecular scanner in the background, which means that they'll actually be able to identify everything in the package at some stage molecularly. And again, Evolve is a US company, which is one of our absolute favorites, which is gun and knife detection, mainly in the US.
And that's so a US company.
Well, you don't, instead of having to put your stuff on a belt and, you know, you just walk through these screens, and the AI screens you for gun and knives. So I think potentially, you know, longer term, it could go into every subway in the world. It could go to every sports venue. They're already putting it in schools and hospitals and A&E units.
Is this at Evolve Technologies?
Where is it? I can't see.
Whoop. Guys are going to put the chart up at some point. Thank you. EVOLV Technologies.
Yes, that's right.
Yeah.
That's probably my biggest position.
Now, you had an evening with Raoul Pal. Let's get on to crypto. What was Raoul's main message of the evening?
Well, I mean, you know, like when you get in the room with any of those crypto guys, they could talk about inventing another language. Do you know what I'm saying? But Raoul was great. It was great chemistry. It was great fun. I mean, we've had tend to have 4 physical events this year for the club. Mm-hmm. We had Nigel Farage, which was fun. Yeah, it was great. Right? When we found out he was going to become...
the Tory chairman defected to reform yesterday.
Who's that?
The ex-Tory chairman.
Oh, did he?
Yeah.
Look, I think that, again, I try to simplify things. I think if you're Conservative or Labour or whatever party you vote for, you are so sort of unimpressed that you're almost likely to try anything else. And I think that's kind of, whether you align particularly with the politics of Farage, I don't think that what came across is that everybody, whoever they vote for, is desperate to try something new, and he represents something new, and I think that's probably why he might well become the next Prime Minister.
Yeah.
But anyway, back to Raoul. Mm-hmm. You know, and listen, the most interesting thing he said, and again, one of the club's biggest collective positions, I think, is Coinbase.
Wow. Okay.
You know, Coinbase, you know, it benefited from the Genius Act, which is stable coins. So stable coins, and I was reading this on the way, I was actually in the chat group on my way here, but I think there were more stable coin transactions, although they're a different sort of transaction, than Visa and MasterCard together.
Right.
So I need to fact check that. But, you know, stable coins are going to become a frictionless payment system that try to eat away on the blockchain, that try to eat away at all of these transaction costs with all the different people with their hands in the till. So that could be interesting for MasterCard and Visa long term. But I think most people that owned Coinbase, you know, which is really the plumbing of crypto, whoever does anything anywhere, it kind of tends to run through Coinbase. Most people owned crypto because they thought Bitcoin was going to go up. Yeah. And Bitcoin's gone up, but it hasn't done what it was supposed to do post the halving. So, you know, we think this could be the catalyst for actually, you know, the move in Bitcoin that everyone's really, you know, a violent move upwards in Bitcoin, which everyone's been waiting for. And if that happens, Coinbase is, you know, a safer way to pay it.
Got it. And then, of course, IG themselves launching a crypto availability on the platform as well. We are only 10 seconds away from the US Open, so I'm going to have to run, and we'll let Angeline come in. Nick Feingold, thank you as always for joining us. Really interesting stuff.
Thanks, everyone.
And enjoy the rest of the day at the cricket.
Thank you.
Thank you.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Hey, trader friends, welcome to the show. I'm here with Elliot. Welcome, and we're going to go straight
in, quick.
Straight in, all sessions. Here we are. Let's have a look. We are off to races, and we've got Neo, top of the list there. Take us through some of the big names there, Elliot.
Yeah, all very strong. Neo, very strong.
Got Virgin Galactic.
Coinbase up on the back of a decent Bitcoin move last night.
Yeah. We've got Oracle and Tesla. A lot of the tech
very
names.
strong. Yeah, it was a real tech-led move.
Yeah, but also the fact is we've got materials following Europe higher as well, because of course in Europe we're seeing healthcare and materials moving higher. The bounce after we saw that reaction to the copper tariffs in the previous session. Let's have a look at the winners list, the losers list rather. We just saw the winners, materials having a strong day and tech as well. Take us through some of the losers, Elliot.
Yeah, not too many. Nothing overly strong. It's quite a positive vibe out there on the street, so not too many losers, to be honest.
Yeah, just a couple there. Palantir just coming off slightly. Nike is down 0.2% there. Rich, if you are listening. Also, looking out for still that Ferrero nearing that deal to buy the Fruit Loops maker. Kellogg, according to sources, nothing through from that yet. Overall, just having a quick look, Elliot, across the board there, looking like it's pretty... well, the FTSE is roaring higher, but overall elsewhere it's looking like a flat to higher day, really. So quite mixed out there.
Yeah, it won't be long. The FTSE will have a 9 on the front, which just looks rather strange.
It does look rather strange, right? We've been waiting for this moment for how long?
Many years.
Right. So give us a quick overview, because of course everyone here has been waiting for your arrival to ask you, what volatility looks like.
A bit of old chat, yes.
We saw it crushed when we last spoke.
Yes, we've kind of hit the floor, to be honest. So because markets are continuing their relentless rally, if you like, a little bit of a reset of the vol surface. The upside has begun to be bid up. So vol, you see a relationship that you don't often see too often, but it's where spot up, vol up. Generally on options, certainly on indices, if the spot goes higher, vol comes out, and vice versa. As spot goes down, vol ticks up. But because it's been so relentless, this rally that we've seen on S&P and especially NASDAQ, you've actually seen a repricing of the top side, if you like. So calls are better bid than they were, say, a week or two ago. In that respect, the skew has then flattened, certainly on the longer terms. But on the 1 month vol surface, that's ticked up slightly. We're now gone from roughly 10th percentile to roughly 20%. So in terms of skew on the shorter term, still very cheap, but a little bit of a reprice given that we've broke out of this range and keep posting fresh new highs.
Is it because markets and investors are now looking at potentially more, risk on, given we've got this new date in sight now, that August 1st? Is that the main catalyst? It's
definitely risk on out there, absolutely. The demand for optionality has generally been on the downside over the last 3 to 6 months. That's now shifted towards the top side slightly more. You will still have puts going through it, probably ratio of 1.5, 1.6 perhaps, certainly on SPX. But yeah, certainly there's more demand for top side optionality than there was 2-3 weeks ago.
We've got this chart up, but you've also got another one that we'll get to in a moment to do with crude. But we've also got those Fed minutes. We talked about this earlier with some of our guests. Seems a bit like a non-event at the moment.
It really was, yes. It's kind of a three-way split in terms of the policy outlook. They all agreed, though, that generally the data's still good. We don't need any action. So they have kind of kicked it down the road, which is very much what the market has kind of predicted. July cut, highly unlikely, I think, probably a 95% chance that we don't cut. September's implying roughly 70% chance of a cut.
Yeah, but even that's coming off,
And that's coming off, exactly. So wouldn't be surprised to see that slip over the next week or two, just because the data absolutely is still strong out there. What they did say, they do expect, inflation is still out there. Absolutely right. They do expect some tariff-led inflation to kick in soon. They didn't really elaborate too much on exactly when that is, but certainly I think give it another 2 to 3 months They expect that to start to filter in. If that begins to filter in, your growth is going to get hit. Your data won't look quite as strong. They might be called into action. So September is where we've landed at the moment, but absolutely, I think that's going to slip further.
Yeah. There is this constant debate out there within the markets, those that decided, oh, tariffs are going to happen, right? We need to kind of like risk off now. Those bears have been back in their caves crying, right?
Really
and licking their wounds, going,
really
we should have done that. We should have been
Absolutely.
like back,
Yep.
risk on, risk on. Are we still in that space? We've seen this. Last week's been fascinating for us here because we've seen this rotation, even into like, big names, big consumer names that didn't have that love in the last 3 months. But we're seeing, that come back. Are we going to see more of this ahead of that August 1st? Some people I've spoken to who trade every single day, some of them even saying, and we're fed up of waiting. We're waiting for July 1st, and then July 9th, and then now it's August 1st. We can't wait any longer.
I think we do carry on. I really do.
Yeah.
I can't see where the bad news is imminently coming, if you like.
This is not trading advice, by the way, or investment advice. This is just a view from volatility.
Absolutely, yeah.
Which is a very good extra
Just from-
tool to have.
Exactly, yeah. Trading vol is like options over the last, say, 4 or 5 years, just to, option growth in the market has been exponential since COVID. You have a look at the exchange volumes and you kind of see that option trading, let me give you this stat, which I may have said before, but 2015 on SPX, futures compared to options was roughly 10 to 1 in terms of daily volume. Now, there's more options volume going through on a daily basis than there were futures, which is unheard of.
Yeah.
So options is hugely booming here at IG, but in terms of the wider market space as well.
Is this anything to do, Elliot, with increasing retail interest as well?
Very much so, very much so. I've got a very close relationship with the major exchanges. I talk to the CBOE a lot. I read a lot of their insights. Very good data. I think a lot of people can actually access it for free, so highly recommend that. And they've really seen a real uptick in retail trading on options in the last year or two.
Amazing. Let's share that. You said the SIBO. Just let our viewers know how to access it for free.
Yeah, if you go to cboe.com, you'll be able to find insights on there, where they have some bold stats and various graphs and various pieces, often updated once a week. It's a real good read, certainly if you have any interest in volatility. So, highly recommended.
Brilliant. And I'm whacking up the website for you. And so that's where the SIBO site is. I have actually been on the live trading pit
Fantastic.
in Chicago.
I bet that's brilliant.
Amazing, amazing.
I bet it was.
I really do miss the days when you can actually smell and see and hear the fear and the excitement. It's not the same on a screen.
Even here, I've been here since 2003, and even then, you had all the phones going, and you could it was just a real buzz about a dealing floor. Now, it's all on the platform, which is a super platform, and it's, in terms of ease,
Yeah,
show
you
the
can do it
platform,
from
show your phone.
home. Yeah.
Absolutely. It's just completely changed, but
Yeah.
it was the good old days, if you like. Show me age.
Quickly getting to the next chart now. A lot of our trader friends here trade oil, WTI and Brent. Let's have a look at this.
Yeah, that's the gold one. If you go to the previous one, that will be oil.
Sorry about
They're pretty similar.
Here we are. I have to save it on my desktop, you see. There we are.
There we go, right, yeah. So just a continuation, really, over what we've seen. We obviously had the Iran and fun and games 2-3 weeks ago, which led to IV exploding over 70%. That's absolutely been crushed. We found a floor, though, okay? So oil vol absolutely does have a floor. We've kind of stabilised back in the low 30s, coming off on a daily basis still, but relatively slowly now. And RV, you can see RV's dropped probably 10 or 12%. So RV is realising, okay, most of the fear's gone now. So RV's beginning to pull back, but still, it is, in terms of RV v IV spread, it's by far the biggest out there. If you want to move on to gold very quickly as well, showing a very similar sort of relationship.
Is this move due to the fact that we are seeing this pullback in the date that Trump keeps chopping and changing? Or
I don't really think so, no. For me, there's just so much cash that's gone into equities over the last 2 or 3 weeks. It really has been. Like, if you think, okay, start of April was 3 months ago, which, how fast that's gone, by the way. But S&P's gone from 48.35 to 62.50.
yeah,
Literally in a straight line. So you are going to see asset classes such as this get smashed.
yeah. Gold's
That's what I'm saying.
fascinating as well as S&P as well. Just on gold, I read somewhere that for gold ETFs, the first half of this year saw the biggest inflows ever.
I can believe
Gold
it.
ETFs.
Yeah, absolutely. Yeah.
Which is interesting in itself. Let's just cross over. We've got a couple of minutes left on to the S&P. Here we are.
Yeah, so this kind of goes back to me saying that S&P vols kind of hit the floor. So last week, realised vol was 6.5. Don't get much quieter than that. But now that we've kind of broken out of this range, gone through the 6,200 mark, as I said, the vol surface has begun to be reset, certainly on the top side. There's more demand for out-of-the-money calls. You see this rare phenomenon. Well, S&P last week was up probably just under 2%, and yet VIX ticked up roughly 1.5%. You don't often see that. So just a little bit of a reset in terms of the vol surface, just because the market makers have to kind of change their stance. Okay, right. We're happy to admit that we're kind of wrong here. This just needs a little bit of a tweak. So we have seen that over the last week or so.
Brilliant. So very quickly, because we are almost out of time.
Very quickly, I just want to... we're about to launch something really quite exciting.
Yeah, tell me about it.
No one in the world... I can't give too much information, as always. I've got a whole...
Oh, you guys are hearing this here first.
Got to keep people guessing. No one in the world has ever been brave enough to have a go at what I'm going to do.
Okay.
But next week...
He's
Can't
a brave
tell you
man.
exactly what we're going to launch, but...
It's opposite Matt Arbour. That's why he's a brave man. You're going to launch?
I can't tell you exactly what, but there's a new product.
Can you tell us at least kind of like which area, which
It will
sector?
be in terms of the options, absolutely.
Okay.
I think it will be quite nice. I think it will be very, very, very popular. So
Next week, going to announce
this
it live
space.
on the show?
Hope to get it out beforehand, but I'll certainly come on and talk about it next Thursday or Friday, if you like. Absolutely.
Fantastic. Right. On that
this
note, very
space.
exciting. Watch this space. Do slap
Off the press.
subscribe button if you want more exclusive insight from Elliot and the new products coming here. Do hit the like and subscribe. I know there's some of you watching at your silent watchers. You haven't hit that subscribe button, but by doing so, it helps us bring more useful stuff to you. Also, any questions for Elliot, do put it through to me at ask@ig.com, and I will get it in front of him and get you the answer. Thank you so much.
Always a pleasure.
Have a great time, and also we are going to have a quick break before we come back with the Art of Investing promo. So stay tuned for that, because that too is brand new.
People immediately wrote off not just Nvidia, but all of the Magnificent Seven in the US.
And they're now feeling a bit squeezed. And they're feeling, oh gosh, I'm now not performing as well as I thought I was going to perform, which is driving that market reaction.
That was the idea. You've got to get onto the property ladder. And that seems to be the mentality, far more than buying stocks and shares and investing your cash into the market.
And welcome back to the show, ladies and gents. This is a very exciting moment for me. Now, I met these two around about 3 months ago, and we've been plotting. What have we been plotting, Chris Fellingham? Welcome to the show.
Thank you, Richard. Nice to see you and to be in front of the massed listeners today. We are plotting a podcast called The Art of Investing, which will start on Friday afternoon at 4 o'clock. And our first series will be going on for 12 weeks, describing in the investment markets how they work and how we read what's going on in them.
Right, and to my left, Mark Holden, how are we?
Hi, Rich. Good to see you. I'm great, thank you. Very much looking forward to helping demystify the investment markets for our listeners and readers and podcasters.
But a big shout out to Chris De La Vega, who works for IG. He came to me a few months ago and said, Rich, I have the UK's Warren Buffett and George Soros, and I want you to meet them because they're interested in doing a podcast with you. So, gents, just give the viewers a little bit of background. Chris, how long have you been in markets? Since World War II, is it?
No, I've been in there since World War One, actually, or at least it feels like it. I've been investing in the City of London for the last 40 years, working for the asset management industry. I've worked for some of the best names in the global industry, including Mercury Asset Management, BlackRock, and for Soros. I retired in December 21, and now am a trustee for one of the largest UK charities, and I am working for a digital asset company building an asset manager for the new world.
Now, not only did you work at Soros, you actually met the man himself, didn't you? Which I'm sure we'll get into on one of the podcasts.
Yeah, I mean, it's absolutely tremendous. I've got a great story as to how I got recruited by them as well, but that will wait for another podcast. That's actually a podcast in its own. But George was and is a lovely individual. I've had the honour of sitting next to him and feeling absolutely scared stiff every moment I've done so.
And talking about being scared stiff, sitting next to somebody, this superstar, Mark, run us through where your career's taking you.
Well, I've been scared because I've worked with Chris 5 times now in the last 40 years that I've been in the markets. So I've been a professional investor all that time. I've worked for some of the biggest investment companies in the UK. Deutsche Bank, which was Deutsche Morgan Grenfell back in the day, Standard Life Investments, which many of you will know because you'll have part of your pensions there, and also ABN AMRO, before they turned into the mess they did and they got taken over. The credit crunch.
Was that anything to do with you, Mark? Did you recommend they took over?
I got out just in time.
Or ABN AMRO, rather.
I left just in time. Left the mess behind.
Okay.
I've also helped build one of the biggest wealth managers in the UK that started off as Vestra Wealth. I was a partner there and we built it into a mega business. It's now one of the biggest in the UK. It's now called LGT, and it's very, very successful. So although I've invested across the world in many different asset classes, I consider myself a bit of an equity and commodity expert within the team, as it were. Having sat on investment committees, I've sort of go-to advice on that area of the market. So I bring a wide range of unique experience because I've worked in lots of different parts of the market, lots of different sides. So I've got a good insights into the way the market works.
Now, trust me, this is the shortened version, right? Now, the first day that the three of us met, we went for lunch, and we went for lunch in the city. And boy, oh boy, did it turn into a 4-hour traditional city lunch. And as soon as I walked away from that meeting, I thought, these guys, I need to get them on camera and we need to get them in a pod because the stories are just endless. This lunch could have gone on for 8 hours, but we decided that we would turn our 100 years of experience between us into helping the financial literacy of the country, helping people get to grips with their investing. Chris, run us through more about exactly what we're trying to do.
Okay, Rich. Yeah, I think we had a very long and useful lunch where a number of bottles of rosé were consumed. But I think the main subject of what we were there to discuss was where we are in the UK with regard to the knowledge around the financial markets. I'm lucky enough to have worked in the financial markets for 40 years. And I've seen at first hand the opportunity for wealth creation that they provide. Now, I think we've got to be pretty honest. When we look at retirement in this country now, with life expectancy where it is, people are probably going to have a 25-year, 30-year retirement. And they're only working for 45 years. So if they think about that and how much money one needs, it's an immense amount of money to be able to retire with the quality that you want in your retirement.
Or have been accustomed to, like Mark.
Well, as Mark has been accustomed to quite a lot, as you can see. Apart from he hasn't been to barbers recently, but apart from that, we're okay.
At least I can go to.
Yeah, that's very true. In fact, I have been recently, which is why it's it is so smooth and aerodynamic. So this podcast is our attempt to bring the markets to life in language everybody can understand. We want to show people how much fun, excitement, and wealth can be created by taking responsibility for your own investments. And in doing so, by helping to educate people, by helping them to understand how markets move, to helping them having that bit of fun and laughter, they can achieve the hopes and ambitions that they want, not just for their retirement, but for their aspirations for wealth throughout their lives.
And so we deliberated over many WhatsApp message and a couple of lunches about what the name of this podcast would be. Some of the ideas were from pension funds to pensioners, as the gents approached that landmark. We considered the benchmark, because that is obviously what we're trying to do better than. But we settled on this beautiful name, which I think Chris was the first one to suggest it, of the art of investing. Mark, run us through why that just grew and grew in our minds as the right name for this, what we're trying to do here.
Well, when I first started back in 1986, the stock market was driven by completely, and bond markets, all the investment markets were really governed by old Etonians, the old schoolboy network.
Sounds like politics.
Exactly. Well, these have less experience than that. And people from Oxford and Cambridge and Russell University. So it was very elitist. And actually, over the last 40 years, thankfully, it's become much more inclusive and much more of a meritocracy rather than aristocracy, which it probably was back in the day. So when we come to talk about investing, people often call it, there's an art and a science, and a mix of the two is what brings you to the right conclusion, hopefully. Of course, nowadays, the science is driven very much by AI, people using systematic trading, algorithmic trading, and the onset of supercomputers is making analysing companies and markets so much easier and much quicker, and algorithmic traders are reacting to that straight away. But what they still lack, I believe, is the art side of it. That's understanding the animal spirits of people, the animal spirits of investors, what drives markets to get overbought or oversold, to go up too much or go down too far. And it's in those moments that having a bit of experience, a bit of grey hair, or ash blonde hair I might have here, will bring that experience to the market and say, this has gone too far one way or too far the other way. And now's the time to step in and try and take advantage of that and fight the computers and the algorithmic traders. And so we want to try and bring that art side, if you like, to all of you and to anyone else and your friends, whoever you think may be interested, and demystify the whole investing side of things. And that, we believe, is the art.
That's right. So the art of investing, and that will be available wherever you get your normal podcasts. And it's coming to you, the first one, this Friday. They're going to be released at 4 p.m. We wanted to get it just before the end of the market, just before the close of the market for the week. You can listen to it on a Friday. You can listen to it enjoying your coffee on a Sunday, or walk in the park on, walking the dog in the park. Chris, when that name first popped into your mind, what was it that you had in mind?
Yeah, I mean, I wouldn't. There's not a lot I would add to what Mark said, but I think I would. I'm often asked by people, what is the right way to invest? And I think that's why we wanted to choose this title, because to me there is no right way. It's whatever works for you. I mean, I've got friends who are economists. I mean, don't take it out on me that I've got friends who are economists, Mark, for heaven's sake. And they swear by by using that skill set. Then I've got friends who are chartists. They look at graphs, they look at technicals, they draw a line with a ruler, and they use Elliott wave theory, which, as people know, I'm quite keen on myself. Or there's people using these algorithms and AI, as Mark says. It doesn't matter. It's whatever works for you, and that's what matters. I mean, personally, I'm not a fan of economists. I know there's lots of people throwing things at the screen now, or at their, or ripping their earbuds out. If economists were that clever, why aren't they all on the beach in the Bahamas? Why are there so many people described as economists who get it wrong all the time?
Now,
sorry, go on. I'm happy to keep slagging economists off.
Haven't you said that after the 12 weeks, then you are going to have to take a week off to go to the Bahamas?
No, I've had my holiday already this year, so that's okay.
Up in Norfolk.
Yeah, that's fine. I've been to Corfu as well, which isn't quite the Bahamas, but it was you can see from my tan. Not got one, but hey, that's life. So to me, it's whatever works for you, and what we're trying to do is to bring it to life for everybody, so they can work out what works for them.
Yeah.
And then they can have fun, they can enjoy themselves, they can build that capital, which we all will need as we get older.
Yeah, and this, by no means is this a trading podcast, right? These guys have sat in their seats for 40 years at some of the biggest institutions in the country, if not the world. And what they really know better than 99.9% of the population, by those, right, Chris, is how to achieve the best possible returns in the long term, whether it be for your retirement, your ISA, whether it be for your junior ISA that you want to invest for your children. So we'll be going through some amazing topics, everything you need to know if you're a beginner in investing. But for those of you that have been investing for a while, there is an added cherry on top. And that is that we will be running a portfolio in which the guys will decide on a weekly basis how their model portfolio would look with what's going on in the world just now, whether it be tariffs, whether it be American exceptionalism, whether it be a big move in currencies. The guys will be tweaking that portfolio, and you will be able to track it dollar for dollar, pound for pound as we go on. And this is what makes it completely different from any other podcast that is out there.
Yeah, I think what we're going to try and do is we're going to set ourselves a benchmark. And when we talk about benchmarks, it's probably worth explaining a little bit about what that means. As a fund manager, you're tasked with beating something. And normally it's an index related to the market you're invested in. So it will move and you need to do better than it. And if you do, your clients are very happy. Mm-hmm. And if you don't, you get fired in the end. And so we need to decide what the right benchmark should be. And we believe that benchmark should be a cash benchmark, mm-hmm. because that to most people is what they are looking to do with their investments. They may be looking for an inflation plus 5% or a nominal 10%. Mm-hmm. We are going to work on the basis that our nominal target is going to be 10% per annum. And as you specified, we're not going to do a lot of trading. This is going to be more the sort of longer term investment that people watching this show will be able to say, we can do that as well. We can be part of that. We can take those decisions or not. Because I think we're going to also try to organise a way for you, the listener, to compete with us and create some sort of friction as to whether you can be better than we are. And I'm, for one, am putting my money on you, the listener, because you can do a lot more than we can do, in the sense of we're going to be taking this as long-term investors. We're not going to be trying to buy some Bitcoin company that Rich is buying and putting his money in to try to double it in.
We didn't say that
in 2 weeks.
That could be in the portfolio. Nobody said anything about that.
It could be if it satisfies the risk and reward aspirations, because the other side to a benchmark, the other side to setting what target you want, is how much risk you want with it. And I give you a little a little example of that. I sat down at Wimbledon on Saturday with my daughters and said to them, look, I'm doing this podcast. Tell me, how interested are you in financial things, and how would you specify and talk about it? And to say they were uninterested would be extremely accurate, just showing how tough a job we've got here in making this all work. But what they also talked about was the risk part and the fact that they were very averse to losing money.
Yeah.
And when I talked to them about how equities, and Mark's got some numbers, and I'll hand over to Mark in a second, when you look at risk assets and how well they have done after inflation, and you look at how cash has done after inflation, there is no competition. Mark?
Yeah, I mean, over the very long term, when we're talking back to 1928, I think the numbers go. But broadly speaking, equities have returned nearly 10% per annum on an average. Bonds are about 6.5%, and cash has been about 3%. Now, inflation over that time period has averaged about 3% over that time. So if you take 3% off of those numbers, so 3% off of cash, which is about 3%, is 0. You've made no real return. And in other words, a return above inflation over that 100 years or so. In bonds, you've only made about 1.5%. You know, that's people would be really annoyed if you employed a wealth manager and you paid them 2 or 3% every year, and they gave you at the end of it 1.5%. You'd be really disgusted with that. But equities over that period have delivered over 6.5%.
Wow.
In real
terms. So that's more than inflation every year on average. Now, some years you get huge volatility where the markets might go up 50%. I remember when we left the RM in the UK, where interest rates started falling precipitously. The housing market, which was in a deflationary spiral, turned around. And the UK equity market had its best year ever. It went up about 50% in the next 6 months. But before that, it was falling like a stone. And you had some years, you know, the Great Financial Crisis, the Great Depression, all these sort of eras, COVID, where markets can fall 40%, 30 to 40% in a year. And that scares a lot of people. But those of us that have been in a professional investor, we've lived through a lot of that stuff. So we now know not to panic when those things happen. In fact, they're very often great buying opportunities if you have a longer term time horizon, which we're trying to bring to investors and to this product.
And that's the point of the benchmark, isn't it? That we're going to have a long-term investment outlook. We're going to adjust it as and when we see things that are happening in the markets. We're going to try and translate what's happening in the markets through this podcast to people so they can understand how things are going. And then they'll be able to see how that impacts our portfolio construction, all in our attempt to get to 10% every year, whether markets go up or down.
And the key is there, we're not going to be trading. We thought about calling this the art of trading. Well, we're not traders. We're going to be investors, professional investors. And a professional investor, like a professional gambler, wants to be there at the end of the year. So there's no point in going to the races, spending all your money on the first race and then not enjoying the rest of the day, you know, and having to spend it in a bar.
Well, you might enjoy the rest of the day more then.
Exactly, maybe. You certainly won't the next day, that's for sure, with a hangover. But the art is to be there in time after time and time. And yes, you're going to have down periods. You always do. And if you don't, well, you know, you'll be lying to yourself, because that doesn't happen. In reality, to get in the top 25% of all investors in the world, you only need to get 65% of your decisions right, which doesn't sound like a lot, but actually it is a lot.
Yeah. And just to reiterate what Mark said there, right? You've got to be there time after time after time. Now, these guys have seen the 87 crash. They've seen the 92 ERM exit. They've seen the Asian problems in the late 90s. They've seen the dot-com bubble. They've seen the financial crisis. They've seen the European crisis. They've worked through COVID. They've seen
Brexit.
everything.
Don't forget Brexit. I mean, it's a subject Spice and I
didn't want to bring it up
because we are on different sides of that debate, but we were there for that as well.
And that's what we're going to bring to you, all that experience, and they are on the different sides of the debate on many things. So it is going to produce some spicy moments.
Oh, yeah.
And
bring it on.
Really excited for this. So just to run you through the timeline of how closely connected to events this is going to be. We're going to record the podcast late on a Thursday, and it's going to be with you by the Friday afternoon. So this is going to be right up to date. As I said, we're going to run a model portfolio which you can follow along at home, which you can reconstruct yourself, or which you can attempt to beat. And finally, it's going to be interactive. We're going to take questions. We want your stories. We want some of your confessions about whether it's your losses or your gains or just your stories. Maybe you've been involved in banks in the city. Maybe you've been involved with these two at some point. I've enjoyed the long lunches.
Please, yeah, please.
We really want to hear those stories. But The Art of Investing coming to you very soon. First episode, I think when you see this, is going to be out tomorrow, Friday, 4 p.m. on any of your normal podcast viewing and listening sources. So, gents, are we ready for it?
We certainly are.
Very
Looking forward to it very much.
Yeah.
Bring it on. We'll see you there for episode 1.
Hello, welcome back to Trade Live with IG. I'm Aaron Bright, joined once again by Martin Harris. How are you doing today?
Good, thanks, and you?
Very well, thank you. So we actually need a little bit of help from the viewers today. We've carved out a new macro and investing slot on this channel, but we don't have an official name yet. So any suggestions in the comments would be most grateful to receive them.
I think we need to get that name before the end of today. I think whichever listener can come up with the best name, we'll figure out a prize. But if we can get in the comments the names that that listeners think we should call it. You've got what, Macro Minute at the moment?
Macro Minute was one. You came up with was it Investment Corner?
Practical Investor.
Practical Investor.
Practical Investor. So yeah. I think a name along the lines of investment.
That's a good one. Macro Magic. I quite like that. That could be a contender.
So anything that has investments in it, I will appreciate. Anything that has macro in it, Aaron will appreciate. So let's try and get some more investment themed names coming up.
Good stuff. So something that, as a team we've been chatting about recently is defense. We've been chatting a lot about that, and we think that that's an interesting area. I mean, you were discussing that to me yesterday. What are your thoughts on this space at the moment? We've obviously seen a big rally in defense stocks. We've seen stimulus coming out of Germany. Keen to hear your thoughts on the defense space, Martin.
Yeah, so I think defense draws that there's two big elements that why we still like defense as a secular theme. One has been geopolitics, and I think you can probably delve into that for us. And the second has been fiscal stimulus. So we've got two aspects of the fiscal stimulus. We look at the United States with the One Big Beautiful Bill, and we look in Germany with their easing of sort of fiscal conditions, as well as the change to the NATO spending agreements, now looking to spend 5% of GDP on defense. And we learned over the last 2-3 years, especially, that defense spending was one of the best deterrents for actually ending up in a conflict, and that the cost of conflict is almost never worth not spending the money on defense in the first place.
Sure.
And you end up having to eat higher energy costs and so on. So most of Europe now on board with that.
I think that what's quite interesting is, even though we've seen the defense space and the geopolitical situation cool down in the past couple of weeks, I think that the situation's unlikely to be fully cooled. I think Middle East, there's always volatility there. Whether the Iranian nuclear project is destroyed yet is yet to be seen, with intelligence coming out of France saying that the uranium was moved and only the top of the Fordo nuclear site was damaged and not the underground 90-meter sub-underground nuclear centrifuges were destroyed. So, a really interesting area, and that begs the question that defense spending is going to be top of the agenda for many different, I'd say, Western powers in particular.
Yeah, exactly. I think in terms of investing in the defense space, a lot of the moves have now been front-loaded. So whilst I'm not looking to trim, I'm neutral in the position, not looking to necessarily add more at this point. I think what you do speak about are the potential catalysts to the upside, is that if it becomes clear that the Iranian regime are going to become an aggressor and that it could reignite conflict in the Middle East.
Well, it's just whether their rhetoric changes, and it hasn't for the past 45 years.
Yeah.
You know, they talk about, you know, basically declaring war on.
Yeah, sure. So I think it's now becomes a case of like, if that's already priced in, they've got 45 years of declaring war. We need to see if there's a genuine threat that might require an escalation of global conflict. So that's the catalyst to the upside, and where there could be some surprises in defense. But we've already seen a massive run in defense this year. There were 3 ETFs that we particularly liked, all investing in a similar basket of stocks. Well, there were 4 that I think I presented on the show a couple of months ago. I can probably try and dig up that video. But it ultimately depends on whether you would like a US-centric defense ETF, something like the First Trust missile ETF, or if you want something that is European-focused. Global X, Han ETF, and Invesco all have ETFs there. And VanEck, not Invesco. Great names. Han ETF have the NATO ETF, and VanEck have defense.
We've got an interesting question here, which I'm going to move our attention to now. Why can't I just buy Vanguard VOO ETF, which is the S&P 500 ETF, which is a great growth, mix it up with TLT, which is their long duration treasury ETF, tracker ETF, gold, and USO. And USO, I believe, is oil. An oil ETF for uncorrelated underlyings. I mean, I think that on the paper, that is, you know, it's got some aspects of a diversified portfolio. I mean, the sort of what alerts me there is that the treasury exposure is all ultra long duration, so you've got quite a lot of interest rate sensitivity. And something that we were actually speaking about earlier is the move away from the US. That, you know, US is obviously priced at 25 times forward earnings. Quite expensive. It's above its 10-year average, which is 17 times. So yeah, there's potential opportunities elsewhere.
US currently 22 times forward earnings, S&P 500. I think what concerns me about that portfolio, so yeah, it's got the building blocks of a diversified portfolio, is it's entirely exposed to US dollars. And so if you're buying that in the UK, and you've had the kind of sterling strengthening over the last 6 months that we've seen, had the markets not rallied, you would have overall lost money in sterling in that portfolio.
Yeah, exactly.
Under the Marco, I think it's meant to be macro scope. That's not bad. Well done, David Boyce. Under the macro, I'm going to go with macro scope.
That could be a winner so far. Mission investable. Well, it sounds like it's impossible, so it sounds like macro is impossible, and our job is to try and make macro possible, not impossible. So at the moment, macro scope, I think, is the clear favourite, but we're open to more, so please send them through. But yes, and something that I was mentioning to you earlier was, you know, diversifying, and this is something that we plan to do with our portfolios, is planning to diversify our US equity exposure and move some of it to emerging market. And often when I speak to clients, and I have done historically, about emerging markets, they think alarm bells, they think debt defaults, they think civil unrest, they think basically all the worst things which are more prevalent in emerging markets are going to come to fruition if you buy those equities. Not entirely true. If you look at emerging markets at the minute, the weaker US dollar is actually very beneficial for them. It loosens credit conditions and makes the US dollar denominated debt much more affordable for these countries, and it cools down the inflation scenario, which is really beneficial for these countries. It gives them a bit more leverage, and we've actually seen the likes of Brazil and other Latin American countries in particular really prudently manage their economies, even more so than developed markets post 2020. You know, they were quick to adjust their policies and their interest rates as inflation was creeping up. They were quick to tighten. bring inflation under control, and then they were, in a position where they were able to loosen. So fiscal prudence is a really, something that from sort of a macro investor is something which is absolutely imperative. So there are certainly opportunities there. And if you look at China, even though it's up sort of 16% year to date, you look at its forward PE relative to the US, and it's trading at like in excess of a 40% discount. So really, really attractive opportunities in emerging markets. Obviously, with volatility, as I mentioned before, those risks can always come to fruition, but that's why it's good to sort of remain diversified within emerging markets.
Yeah, I think one of the comments I made, not on this show, but on the previous iteration of what was IGTV, was that a lot of these emerging markets economies didn't have the I've forgotten the word actually, but they didn't have the chance to call inflation transitory. And so for them, inflation was a massive problem for their economy. They're often, their debt is US dollar denominated. It's not denominated in local currency, so they can't often grow their way out of inflation, or rather their debt repayments. And so they've been in a much better, as you mentioned, alluded to, much better fiscal space. The weakening of the US dollar means that they're importing less inflation.
Absolutely.
And so
it loosens credit
are
conditions.
really, so EM at the moment is in a bit of a Goldilocks zone, and long may that continue. There will come a time where there's an end to it. I think as soon as, and that time I think is as soon as there's a restraint of fiscal spending in the United States. At the moment, Trump's one big beautiful bill, which has really been dictating the kind of the pace of the US economy. We have major concerns now regarding rates in the United States, what the long end of the curve looks like. Macrovest coming up on the screen.
Macro gilet, I think we should call it.
Macro gilet, gilet and friends.
I just got told that's absolutely not from the gallery, so from the macro gilet.
So I think one big beautiful bill. I'm going to try and retain my thoughts there. 10-year rates haven't really reacted too much to this higher debt spending. So I'll quickly go through the sort of the sectors that are going to be affected by the one big beautiful bill. But rates went up sort of 16 bips.
Yeah,
and look, that was in the course of a week, so it's a large move in the course of a week, but
certainly
they have stabilized. The rhetoric from Trump, he came in on the ticket saying that he was going to cut debt, cut illegal immigration, cut waste by the federal government, and that lasted all of sort of 3-4 months. Now Elon Musk is out of Doge. I think they only ended up sort of cutting 120 billion, something like that, out of the, they said that they were going to cut trillions. So Doge didn't have the effect that we thought it would, and
the tariffs are back.
And the tariffs haven't had the impact to the fiscal sort of integrity of the economy yet.
What was interesting is they were underestimated by pretty much everyone.
Underestimated, but
in November.
But the Trump taco trade, him backing out, and even today, so the tariff deadline was meant to have ended yesterday, 9th of July. Yeah. That's being pushed out. Scott Besson talking about...
he even had a go at Japan on Twitter saying, or X nowadays, saying, I'm going to put tariffs on you whether you like it or not.
Yeah, and they've just ramped up tariffs on Brazil.
Yeah.
That's the one economy where there are concerns now, because Brazil's actually, when they did, I saw an analysis from Bloomberg, it's the #1 importer to the US on a tariff-adjusted weighting. So if you take the costs of their tariffs, they have the highest cost going in. If you look at countries like Japan, countries like South Korea, what they're importing into the United States is electronic goods and autos, and those already have their own specific tariffs.
Yeah.
So there's already a set tariff for cars and for computer components, and often it's been discounted. And so by slapping a really high tariff on South Korea or Japan, almost none of the goods that are coming in from those countries are actually exposed to that tariff.
Yeah, good point. I mean, another area which has been flying in the markets for a while now, actually for probably about 18 months, is the credit space, and in particular the high yield credit space, which is really the high yield credit space is when companies issue publicly traded debt that they are sort of got a lower credit rating, so it's called high yield because they have to offer a higher yield because otherwise no one's going to buy this debt. And something which, if the gallery could kindly put this on the screen, that we've been looking at is the spreads, which is basically you have the high yield yet with the same maturity, and you take away the yield of a. I think in this scenario it's the Bank of America index, so it's probably going to use treasuries. Essentially, when there's a big spread, a wide spread, we say it's an attractive time because to buy them, because it means that the difference is big and the yield you're getting is really a lot bigger compared to what you're getting on a treasury. The grey areas there show recessionary periods, but what you can see is as we're approaching sort of post 2024, 2025, you can see the spread is super tight, pretty much its lowest it's been since the late 90s. So it means that this area is potentially quite expensive. You're not getting the all-in yield, relative to what you could be getting if you invest in a safer asset such as treasuries.
Yeah, so I think this is what I wanted to say here. Historically, our fund has invested in US credits, so US companies that are issuing debt. That compression in these credit spreads has meant that we are now looking more towards Europe for debt. Europe has got slightly better terms in terms of we get a higher yield relative to. It's got a stronger.
I'd say that the default rates in Europe tend to be a little bit lower as well, historically speaking.
And Europe are potentially in a cutting environment. Yeah. So we're not seeing that with the Fed.
Yeah.
So. That's when you now get an opportunity that if you can lock in a higher rate, lock in a higher yield with a European credit.
I think the stronger euro is actually really beneficial for European inflation, and that's I think why you're seeing such a dovish ECB. The imported inflation, pretty much the opposite of the same as actually what we're saying for the emerging markets, is actually happening also in Europe. So it's in also, I'd say, similarly in a Goldilocks zone.
I see that there's the wires out now regarding the minutes from the FOMC, and very few of the Fed committee are looking to cut in July. Still looks like one cut this year. I think that there's this sort of Fed conundrum where they almost should be easing ahead of the employment risk that we're starting to see in the market, but they're still haunted by sort of past policy mistakes of sort of excessive.
If you look at the sort of 70s and 80s.
Yeah, well, even more recently, but as recent as COVID times, this kind of excessive and unnecessary extended asset purchases, we saw that coming out post 2008. The zero interest policies around just before and leading into and through COVID.
Agreed.
And on top of that, here's my one big beautiful bill. I'm just going to touch on 5 aspects. So there's kind of the tax recap of what it delivers. So one big it's beautiful going to bill cement the Trump tax cuts that we saw from his first term. Those have now been made permanent, and there's some additions to it. So there's things like you can depreciate bonuses. There's immediate expensing of R&D, which will really be good for the hyperscalers, anyone going into large capex projects around data centers, things like that. It allows you to realize that tax shield up front almost within the first year. And there's also some provisions for permanency. Also, the smaller stuff, the no tax on tips, no tax on overtime, limiting interest that you pay on car loans. So how you can expense factories. So those are all temporary provisions, but that's an interesting one, and it does sort of to appease, I think, a lot of the Trump voters. The negatives around the healthcare ecosystem, so Medicaid reforms, that's going to be, it's going to have lots more higher uncompensated care to hit hospitals. And so probably going to see future Congresses revisit that. And also that Medicaid is going to focus its spending on technology vendors. So beneficial for some sort of medical technology companies, and not beneficial for hospital businesses in the United States.
So what's the trade there?
I'll come back to that one. Renewable energy, It could have been worse. So this is where they're going to look to eliminate the tax provisions on renewable energy firms. This affects the likes of Elon Musk's Tesla. Geothermal, nuclear and battery storage companies will see some relief, but the businesses are not allowed to utilize. The big thing is there's an anti-China language pervasive throughout this law. So businesses cannot use Chinese built technology or infrastructure. The defense sector, so this is, again, I think we've spoken about it a lot today, but this kind of rising tide which lifts all boats. In particular, it's going to benefit the shipbuilders. So shipbuilding is the largest beneficiary, followed by missile defense and aerospace companies. So a big shift towards technology and R&D. So cybersecurity will benefit, drone technology and so on, and anti-drone technology too. And so this is going to likely push annual Pentagon spending above $1 trillion for the first time in history. And I think the last one, which is kind of not in the headlines, but there's going to be some tailwind for private student lenders. So they'll be able to start recouping sort of bad debt from the students who have not yet been paying their student loans. So tailwinds for the student lenders and some headwinds for, I think, some of the agricultural firms and the discount grocers. I think in terms of the tax, a lot of that has already been front-loaded, as we discussed earlier. Companies that I think it's really quite broad, so I'm not going to give a specific name, but hospital infrastructure companies negatively impacted by it. There's going to be less availability for them to claim from Medicaid, and any medical engineering firm, pharmaceutical firm, they're going to benefit more from this.
Interesting stuff. Before we round off, a couple of comments from Mervyn here about BAE Systems, Lockheed Martin, and General Dynamics, or General Defense. I think I don't think you can go wrong with these for the next 5 years. I mean, obviously we can't give investment advice, but they seem to be quite big beneficiaries of this sort of increase in defence spending.
Absolutely. Yeah. Is there going to be expectation of earnings growth? We'll need to wait and see. The news has now effectively been, as I mentioned, I'm going to use the word again, front-loaded. So we know how much people or how much governments are going to spend in these companies. There needs to be a catalyst either from a geopolitical concern, or there'd be a catalyst in that they are prepared to spend even more for those companies to continue their run.
Latest couple of suggestions we've got are Macro Panacea or Harbright Macro Vest. Sounds like a hedge fund.
Okay, so Gavin, thank you very much. Harris and Bright Macro Vest. Okay. We could. I mean, that's you've stolen the name of our company that we're going to spin out of IG. Yeah. So we might not use that one yet.
Yeah. And on that note, that's all we have today on the currently unnamed slot. But we're going to be back soon with a name for this slot. And hope to see you again soon. Thank you very much, Martin. And have a great day.
I think